What's up, everybody? Welcome in to Zeta Earnings Live. I'm your host, Ronnie, and I got a bunch of freaking people here ready to kick off Zeta Earnings, and it's about to be absolutely crazy. The stock is already up almost 12% today. Does somebody know something, or are we just seeing a big old bounce and, SaaS and stuff is finally getting, some love? What's up, guys? How you doing? How's your day?
What's up? Appreciate you having me on. It's a good day. We're looking at the markets, tell you that.
Very good. Very good. And make sure that on X, you guys share your thing because the X thing's down still.
Already
share it over.
Yep.
Just shared it.
What do you guys think about this? It was over 12%. Now it's like 11.58% up, but absolutely massive day for Zeta. For SaaS too, but more so Zeta.
I think we're just seeing, honestly, a large bounce in just high beta names, because even like the names like T1 Energy, a lot of other names are up. Like T1 Energy is up 12% today as well. And so I think we're just seeing a lot of names bouncing that are high beta. I mean, even Hims after their crap earnings is up 3%. So I feel like we're in an environment today specifically that there's just a lot of names to run freely that have been beaten down like crazy.
I gotta be honest, I'm not a huge fan of the lower volume. I mean, we still have an hour left, and most of the volume comes toward the end of the day. But by now, you'd see a lot of volume pick up where it would supersede the previous days. So, I would like to see a lot of volume and continue to follow through. But the market's gonna basically just been in a range since last October. So, I don't think it really changes anything in one day. But yeah, we do need to see some follow through, and obviously we have the State of the Union today, which I heard is going to be a lot of data center announcements from Trump. And also tomorrow is the NVIDIA earnings, of course. So that's going to be something.
Yeah, I'm hoping it's not like a lemonade where it ran up a bunch the day before, dropped like 35% the next day. So
yeah, I mean, it's better that they're doing earnings today when we have the bounce versus like yesterday, because yesterday would have been a brutal day for earnings.
Yeah, that's what I was telling Nick. I was like, he's like, I don't like to run it. I'm like, why? It's a good sentiment day to report, at least in terms of after hours action. It gives us some sort of possible upside.
Yeah.
Whereas if they were reporting last week, like they were cooked no matter what they reported.
Yeah, it wouldn't have mattered.
At least I got a shot. At least have a shot today.
Exactly.
Because most of us on here expect profitability this quarter, and we expect them to crush it. And just what we were talking about yesterday, I want to bring this back up. And I know you got an agenda, Wealth, but man, after looking at that Marigold data, how much they're going to be pulling in from Europe, and like the brands are pulling in, just Hilton alone, the rewards program with Hilton is massive. Davis and Sam, we were talking about this yesterday, and we were like, I was prompting AI and trying to see like how much more data they're pulling into their data moat from this Marigold acquisition, because we really haven't discussed it too much, and it's like they're saying like 500 million plus.
I don't know if it's that large though.
I don't know either, but we at least think it's going to be a couple $100 million. But yeah, basically AI, and it's all its wisdom, and scanned everything. It's like Hilton's Hilton's rewards program, Adidas,
AT&T is a big one.
AT&T is a big one. A bunch of like newspapers and news whatever, which is funny because like the whole live intent, that's how they got so much data in the first place. So very, very bullish there. Market's pulling in a little bit. Now Zeta's only up 11.15%. But what you got for us on the agenda, Nick?
Okay, so obviously I woke up this morning and I wrote essentially a list of things of what to watch, or at least what I'm watching for. You mentioned already, but gap profitability. I guess we could kind of go around and get everybody's opinion real quick. What do you guys think? We'll start with Sam. Do you think we're going to hit gap profitability? What are the odds this quarter? Is it 50-50, 75%, 10%? Like, what do you think? You're muted.
I think it's going to be like one of those Palantir earnings or SoFi earnings, but like they're gap profitable on paper, but like it's not by a lot. It's going to be important to just show that gap profitability anyway. But they are already free cash flow positive, which is what I look for. I am looking for expansion into, let me just double check something here. Yeah, looking expansion into profitability for its operating margin more than anything. Of course, it is good to have bottom line profitability, but last quarter they're already profitable from an operating or EBIT basis, $8.8 million. So continued expansion, but that won't be good because our operating margin is already in positive territory. I mean, this is the thing, like GAAP profitability from the EPS estimates. Like, dude, you can make yourself GAAP profitable or non-GAAP profitable or adjusted GAAP profitable, whatever it is. Like that doesn't, to me, that's not really such a big deal. Operating profitability is much more important because there isn't that tax or earnings for interest tax, the depreciation amortization, right? So operating income is EBIT, earnings before interest and taxes, right? So if you exclude that stuff, that's really going to show how the business is doing from under everything, right? But when you go to the bottom line, there's all these other financials and accounting you can do to make it look like you're GAAP profitable or not GAAP profitable. Unfortunately, that's what the algos work off of initially, right? So that is going to be a number they're going to look at. I don't know what the estimates are for GAAP EPS. I don't see it here. I only see non-GAAP. Yeah, that's non-GAAP. That's not GAAP. So
I don't know what
they didn't provide it.
I think they are expected to be profitable this quarter. But the guide, of course, is going to be important. They have to beat their raised guidance, right? And in order to keep that momentum, because the stock was like $24 with those expectations. So in order to get back there, theoretically, you have to beat those expectations, right? Yeah. But I was telling Ronnie before we went live earlier, like, I don't like how it's up 12%, but it's not as bad because the whole market's bouncing, right? So he was saying before, like, look, if the whole market was just flat or whatever and Zeta's up 12%, that wouldn't really make me too confident in the earnings. So I would associate this with just going with the bounce of the market right now. And whether we see some fall through or not, obviously, is going to be important. And I am not going to trust the first move or even the second move in earnings. You know, I usually trust the moves after the print if it stays on that side, right? So if it stays positive and continues to rally up, I would trust that more than like a pop, and it's like 1-2 minutes and then it loses it. Like then it's like, okay, well, you know, can't, but it's got to like consistently stay there to be a positive earning reaction for me in order to not have that reversal. But yeah, as they were saying, like, dude, it could be a lemonade. Like, you don't know. You really don't know what's going to happen in this market.
Yeah,
that's fair. Ronnie, what do you think? Are we get profitable?
Yeah, I think they come in and like do like a Palantir as well, like a SoFi, like 0.01% or less, 0.000, something like that. GAAP profitability. Yeah, I think they're GAAP profitable. I think they beat their non-GAAP. I think I said that they were going to do like 0.26 and they were guiding, it was analysts had them at 0.23. I think they do 0.26. And then for revenue, it's 379. I think they come in at like 390. I think I said 394 million. And then I think they raise guidance. I think David is a very intelligent person. And I think that he understands the pressure that the stock has been under since the OpenAI announcement. I think that he understands that the narrative right now is SaaS bad, Claude kill, SaaS. I think because of that, I don't think he comes in and like sandbags numbers as much as he typically does. I think what would be best, and I think what they do is kind of talk more about what they're going to actually do. Still leave some room for error. They just have so many things coming up, right? They just had, like I talked about this in a post. We talked about this yesterday. You had the Olympics. Now you have FIFA World Cup coming up. Then you have midterm elections that are not going to be like some like blowout anything. Like everybody's going to be spending crazy amounts of money on ads. So I think it's a blowout quarter. Absolute blowout.
That's fair. And I agree too about GAAP profitability with both you guys. I think it's going to be fine margins. And I think I highlighted that too in my projections. Regardless of what happens, it's going to be either under $1 million or just slightly above $1 million into GAAP profitability. Nate, what do you think? And we'll go
I don't want to go through and, you know, kind of copy what you guys say, but I do essentially agree that it's going to be just a minimal beat to help with the algos and keep the momentum going, but it's not going to be anything crazy. What I'm looking for moving forward is continuous GAAP profitability and continuous operational leverage over the next 6 quarters, not just today. But I do think they start the momentum during this quarter of being profitable, and then into 2026 they can say they've had a full year profitability once we hit 2027. So
that's fair. Davis, what do you think? You're our Wall Street quant over here, so
yeah,
let us
sure.
know.
I was so obsessed with the idea of gap profitability, and then today I was standing outside. I'm like, I genuinely don't care if they hit it or not anymore. I'm more along with Nate. I'm like, if they guide for continuous profitability throughout all of 2026, that's mostly what I care about, because I'm not in this stock just for this quarter. I'm not in it just for gap profitability. I want that continued gap profitability, that continued expansion. Like, I want to see how they're going to capture the rest of the Fortune 100, because I think I commented on one of your posts, Nick, that they went from 44 to what was it, 76 or something like that?
64%.
64%. It's like, I want to hear what they're doing to capture more customers. That's more what I'm looking forward to hearing. Like, gap profitability, we know it's going to come. Like, it's inevitable. So I think they'll hit it, but I just kind of tempered my expectations. But I still think they're going to hit it.
I'm hoping it's not a scenario where they force it and really come in and destroy it, where they didn't need to. I'm hoping it's like a Palantir SoFi where they beat it incrementally, and the next quarter they beat it incrementally, and it's just sort of a natural progression rather than like a forced EPS, crush to look profitable, quote unquote, for the algos and the other funds. But I think because of that, it'll be literally probably less than the $2 million beat, which is essentially nothing when a business is valued at $4 billion or whatever.
Yeah, I agree. And I don't think they're going to force it either, because if they wanted to, they would have done it last quarter as well, when they made the point that they were within 6.5 million of being.
It literally would have been there if it wasn't for the acquisition. But the acquisition's like, even if they're not profitable this quarter because of the acquisition, it's still like an amazing acquisition that, like, the amount of data that they're pulling in and the amount of reach they're getting to across the pond over in Europe is just insane. So I think that's a very fair point. I'm glad you kind of went against what everybody else is doing, Davis. I like that, because it's good to ground us all, right? Like, we talk about it a lot because it's something that's so, it's something that we really believe in and we really see happening. But you're absolutely right. Does it really matter in the long term, in the grand scheme of things? No, it really doesn't.
Eventually we're going to go from talking about profitability to talking about S&P 500 inclusion. And I'm excited for that day.
That's going to be
awesome.
Yeah, probably a long way away though with the stock price.
Don't tease me, man.
Dude, the way they do it, like with Robinhood and SoFi, how they're like, it takes forever, man. Jeez.
I honestly feel like that the kind of quote unquote cult following that Palantir and SoFi have is not as big as Zeta, in my opinion. And I kind of want to keep it that way, because then
no, you're crazy.
I don't think. Okay, first of all, you guys aren't the only ones that are on Twitter. There's many other people on Twitter, right? So I know you guys have a large following and everything, but in my opinion, this is not a massive cult following.
Oh, you said that Palantir and SoFi.
You said opposite, but
you said the reverse.
Oh, I did.
I was like,
my bad. No. Palantir and SoFi obviously have cult followings, and so does Hood.
That's what I was confused with.
Because
Palantir, SoFi, and Robinhood don't come close to the cult following of Zeta.
Really?
That's basically what you said the first time as a joke. I couldn't tell. Yeah.
Yeah. So if you get that call following, then you start getting gamma squeezes as it heads into big events, right? So people are going to be pressing call options. That's obviously what happened with Hood when it dropped, and that happened with Palantir every single quarter until they actually joined the SP 500. And what a lot of these retail stocks is that causes false price moves heading into an earnings or a major event. And then you get a massive sell when it doesn't happen. And I hate that, because it's this doesn't really help any scenario. And in fact, it dampens expectations when they don't get included, because when they do get included, that's when everyone gets excited. But the hype, when that actually does happen, it's not as big as the initial move when they thought it was going to get in. But
we talked about that last night. We talked about that last night because it already did happen to Zeta. Remember, just a few weeks ago, everybody was talking about Zeta. Everybody was a Zeta guru after the OpenAI stuff, and it was up and away to $24. And then, like we were talking about, Zeta did nothing wrong. no news, no hit pieces, no anything. Just simply Claude came out, SaaS started to happen, and then we saw an absolute plummeting. I think the reason we saw the waterfall effect on Zeta so bad was because you had so many people, because their favorite X follow, their favorite YouTube follow, whatever, they're all jumping into the stock because everybody's talking about it now, right? And it's like, how can I not buy this thing? This is the next Palantir. This is blah, blah. And then SaaS Geddon happens and starts to sell off. And then people that don't know what they're holding, and they're just like, oh, Zeta's garbage, dude. Like, now I'm down on it. And they start selling. And then, you know, it can go up super fast, like 25. And then it can also like waterfall like it did once there's, and again, they did nothing wrong. It's just simply like Claude happened. And you're absolutely right. Whether it's at any time you're getting too much hype. And I said this to Nick. You remember when I said this to you? I was like, dude, I really don't like everybody on X hyping this name up now, because every single time it happens, the stock does pull back pretty viciously. Yeah. Whether it's Zeta, whether it's Oscar, whether it's Hims, like it's like if you start seeing that, you better just, I don't know, sell some cover calls, because it's getting bad.
I saw that smirk when you said Hims, Nate. Yeah. Don't think I forgot.
No. No comment.
No one here's a Hims bag holder anymore, so we don't need to worry about that. I thought you sold.
Dude, I can't. I just can't. Whatever.
Well, hopefully the entire portfolio appreciates so much that it's not going to matter anymore.
Yeah.
I mean, honestly, if you didn't sell yet, like, I mean, it is 15, but I don't. I mean, selling now is, you might as well hold
on. That's famous last words, man. There is never a too late to sell. When the conviction is gone, you sell. That's just how it is, no matter what. And I would even say no matter what price, because otherwise I always joke around with backholder. Backholder is just a term that's funny to use, but like, I don't attribute conviction with being a backholder. It's just, you have your risk in the stock, and that's what it is, right? You can't do anything about the price. Like if Zeta never sees $24 for the rest of the year, which would really suck, then it is what it is. But that doesn't necessarily make you a bag holder. Now, if you're waiting for Zeta to get back to $20 so I can sell my bag, that is being a bag holder, in my opinion.
True. No, I didn't like. Yeah, if you don't have the conviction in Hims anymore, then you should definitely sell.
You should sell.
Yeah, if the thesis breaks,
I just meant so like on a technical standpoint, where they're at 15, like there's so much support in here, like. I was just meaning
NFA though, NFA, not financial advice. Do what you guys want.
Yeah, not financial advice.
That chart is horrendous. I don't see anything bullish about this chart whatsoever.
Dude, the weekly chart on Zeta is pretty horrendous too, though.
It's all bad. Yeah.
Any high beta, like we were talking about, is really bad. But all right, Nick. What else do you got for us?
Okay, so what I wanted to move on next was forward guidance. So this kind of takes us off the topic of gap profitability, and you guys are right. It's kind of meaningless right now. It's just sort of this waypoint in time that we can sort of, put a flag and say, hey, we did it, right? We kind of move on from there. But what really matters is that forward guidance. Something I'd like to bring up is, remember, Zeta's only given us a bare minimum. They've only given us the bottom range of that guide, right? And they haven't, they may actually come out and do an 18th beat, consecutive beat and raise. And on average, they raise every single quarter about 1.2%. which would then put Q1 at about 38.6% growth year over year next year, which would be wild, absolutely wild. But what I'm really interested for, and I kind of want to get to, open the floor here and just kind of talk about it as a group. What do we think the top end range is going to be? Because the bottom end range puts us at 34% year over year growth, which was 1.73 billion for full year 2026. What do you guys think, Ronnie? Nate?
I would say it's a very ambiguous question of where the top range could be. I think it really comes down to how they're going to play Athena and how they're going to market that. I know right now it's obviously free, and it probably will continue to be sort of that free platform, but it allows them to garner a lot more revenue. And so I think I don't want to say the sky's the limit, but I don't really see like a top end. I mean, obviously like anything over, to me, 60% probably is too much. But I could see 40s, and there's a good chance 50s if they come in with Athena and it crushes and it really is that valuable. And we're getting, because what I want to see is more visibility on what it turns into. Maybe it's a neat sidekick, but then it doesn't really churn much to actually more revenue or more contracts or longer contracts. It's just like, oh, great, this is a nice product. Thanks, Zeta, and that's it. That's not the way I think it's going to go, but you want to always keep all your options open. And so I want to see more visibility on how they're thinking about Athena, some customer success stories from the enterprises of how they're thinking about Athena, how they're using it, how it's valuable to them. And then from there, I think that kind of creates the story and the narrative of where Athena's going. And I really hope we get to a stage where they have, and I think we've had some conversations, like AthenaCon or an AIPCon, where they come in and just continue to hammer the marketing with Athena and let their enterprise customers do the selling for them. And then from there, to me, the sky's the limit in terms of growth. But yeah, just my opinion. I think it's hard to give an exact top range. I think you mentioned 38%. I mean, it could easily hit the 40s. They are always conservative, and so I think it's pretty fair to say it could hit 40s. But
no, that 38%, that 38.6% was just for Q1. That's if they come in and they do a 1.2% raise, right? So the full year guide, the bare minimum what they've given us, and they've literally called this the floor. So quoting Chris Grinder, the CFO, he said at the Needham conference a couple weeks back or a month back, he said that the absolute floor was 1.73 billion, which is 34% year over year, and they didn't even count
2026.
Yes,
right?
correct.
Yeah. That's what
so they didn't give us the top end of that range. Is kind of my point. And they also mentioned that guide doesn't account for Athena as a tailwind. So essentially, Athena is this massive flywheel. This is mechanism, this AI machine that comes in and just creates this flywheel that allows Zeta to kind of upsell different channels that a customer doesn't already use by sort of that stick and carrot method of, flaunting in front of them, hey, higher ROI, use this channel, you'll get better results. But we haven't really seen the impact of that yet. So like to Nate's point, I want to see some more feedback. We've seen a couple things, obviously, from what was that, TKO, the UFC's CFO or whatever it was, came out and said something. But I want to see some more customer responses, and enterprise customers will eventually just sell the product.
Yeah, I'm curious to see like if they're going to give some visibility on. I think it's going to take a little longer, but maybe in Q2, Q3, there's more visibility on what Athena turns into in terms of like extended contracts or the extension of those contracts and kind of what that turns into for revenue. Because like you said, it's a flywheel. If they see the value from it and it, however Zeta prices it and however they do it moving forward, I just want to see more visibility there and just more talks on it, more emphasis on it from the Zeta team.
I agree. Anybody else have any thoughts on that, on forward guidance?
You said they were at 1.54 billion fiscal 26 guidance. Now you said, I know they raised it, right? They raised it after the Marigold acquisition.
Yes.
What was the number again? 1.6?
No, 1.73 billion.
1.73 billion.
Yes.
So if they raise, if they raise fiscal year 26 guidance again here, I mean, that's going to be like, how are you not super bullish on that? I can't see them raise it that much though. You know what I mean?
Well,
they're always super conservative with their guides, right?
I don't think they're going to raise that bottom end.
They could.
I think what they're going to do is they're going to give us a top end. What they're going to do is they're going to come in and raise Q1, right? So whenever they do a beat and raise consecutively, they come in, beat the quarter that they're reporting on, and then they raise the next quarter. And on average, it's somewhere between 0.9% and 1.2% raise for that following quarter.
Which it was, their guidance was 314.5 million, a 19% year-over-year growth. Now it's 379.25 million for this quarter.
Yep.
Again, I'm guessing that's analyst and also just the bullishness.
Yeah, something that's interesting there I noticed is the Zeta is guiding for 380 million for revenue this quarter, and analysts are estimating 379. So analysts are expecting that Zeta misses their own guidance. Isn't that interesting? I think that's very.
It's also crazy that they were guiding last earnings. They guided for this quarter 314.5 million. Like, how did we accelerate? Yeah, how did we accelerate that much?
Well, I know that we accelerated a little bit because they added 16 million for the Marigold acquisition.
Yeah,
I think they were guiding for 364 this quarter.
No,
for fourth quarter 2025.
No, I'm looking
guiding
at
380.3.
No. I'm saying before the upgraded from the Marigold acquisition, I think it was 364 and a half for what I'm seeing. Either way, They upgraded it.
Oh yeah, 4Q.
Yeah, I'm gonna say I'm pretty sure it's 300 because they
Yeah, my
didn't raise their
bad.
guidance by 60 million. That'd be a crazy guidance raise.
No, but they
Um,
guided for first quarter 2026. too.
Oh, I see what you're saying.
Yeah,
I see
they
what you're
did.
saying.
Yeah. Which he only guided 314.5 million.
I see what you're saying. Okay.
Yeah, sorry, my bad. My bad. I got the quarters mixed up.
And now I see they're guiding for 362 for Q1.
Whoops.
Yeah, 362 for Q1, which is 37% year over year.
Yeah, this is their original free fiscal year 26 guidance, and then this is original
I see what you're saying.
first
Yeah.
quarter. But yeah, you're right. You're right. Up here, where's it at? Right here. Yep, 363 to 366.
Yep.
Mhm.
And
But
now they're going for 380, and they're probably gonna hit like 385, which is gonna be awesome.
379.
Yeah.
Yeah,
If
based
you get
on like
anywhere near
average
390, that's insane.
they 394, I think. I
Odd
took
to
the
watch.
low end of their average revenue beats, and I think they could do 394. And that would be crazy.
Yeah. Well, they're guiding for next year. Marigold is flat. Keep that in mind, guys. So I think they're primed to really beat. Really beat.
Oh, yeah.
I think they're going to hit around 40% year-over-year growth next year.
All right. On that note, I'll be right back, guys. I'll be back in like 20, 30 minutes.
All right. Sounds good.
Gotta go hit a work meeting.
No worries. No worries. Sam, any thoughts on forward guide?
I'm honestly expecting them to beat as they usually do. The EPS beat, not really looking at that one too much. I mean, we already talked about the revenue beat. It's like 17 quarters out of the last 18 quarters. So obviously they're going to beat, and whatever they guide, they should be beating that one. Any minimal guidance for this company that they do provide is, I would really attribute to, it could be anywhere from sandbagging to kind of in line with what they're actually going to be reporting. But like you guys were mentioning, when it comes to Athena, it's still in trial phases, and they're going to be releasing it publicly in the next couple of quarters. And the goal isn't to monetize off of Athena subscriptions because it's free, but it is the cross-selling when it comes to this product. They already have the partnership with OpenAI, and we're already starting to see partnerships with Anthropic, with other companies as well, just because Anthropic's looking for the data. Like we saw today with Thomson Reuters, Thomson Reuters is the only one that has the Westlake data, so that's why they partnered with them. And you're going to continue to see these partnerships from other companies to gather data. Zeta is obviously more in the marketing standpoint, so maybe it might not be so strong for Anthropic to do it, but I mean, who knows, right? Anthropic could get into advertising, doesn't mean they're not going to. They just say they're not going to today, but at the end of the day, how are you going to make money off it? So if Zeta can help them do that, then that is the going thesis for the company, right? When you think of generative engine optimization versus search engine optimization. So to me, does this print really matter as much as these numbers? It would be nice to see like a massive beat, but I'm not like, hey, I want to make sure that they beat like tremendously where they're guiding for 40% for the entire year, next quarter, whatever. So it'll be nice, but I don't think the expectations are too high when it comes to this company right now, which is good, right? So you were just saying that the mean estimate for this quarter is $379 million, and the standard deviation is 4 million, right? So there are some analysts that are looking at about 30% above that mean for within the guide that they have for 380 million, but then the bottom 50% is below it, right? So the bottom 50% of analysts don't think they're going to make it. But even then, the highest estimate for this quarter is 381 million, right? So it's like, you know, the expectations are not that high for this company. And considering it was just a $24 stock, not more than a month ago, I don't think it'll take a lot to get there. But the bigger question is IGV going to come back? Is software going to come back? Is tech going to come back? I think that's really what matters the most, right? Because if we continue this massive downtrend with software, like all bets are off, guys. Like it's just, I don't care what these numbers are. Like it is not going to go back to $24 if IGV is making new lows. It's just not going to happen. But, you know, nice little bounce today. Let's see if we follow through on IGV. We got a couple events in the next couple of days, so they get pretty positive with that. I'm more in the macro standpoint when it comes to this because we already know the company's going to perform, right? So,
yeah, we talked about that last night on the live stream. It's they can crush it, and then they can just sell off if if IGV, SAS, if the narrative keeps going down, then that, I mean, it doesn't really matter. It doesn't matter what they do today. It does, but for the stock price, which people think means that the stock is good or bad, good investment, bad investment based on the price action, which is funny because $24, the stock is great. $14, the stock sucks. Make that make sense, but whatever. Yeah, I mean,
so Sam's more focused on the macro in general, and like he's along for the ride. Earnings coming, right? It's you know, I agree with you, Sam. I think overall that Zeta is going to perform in the long run, and the macro right now is the main concern that it's going to drag down stocks like Zeta. Is that fair? Fair analysis?
Yeah, I mean, I've already made my decision before we got this massive pullback of which stocks I'm going to make a core holding, which stocks I'm not. And Zeta is already a core holding of mine. And if it wasn't, I would have been out of it, guys. Like I would have been out of Zeta when it broke that 200-day moving average, and I wouldn't have added to my position when it was $18.50. But you know, here we are today. There's nothing we can do about it. But yeah, I would have been out of this if it was like purely like a trade and not a core position. But when something's a core position or portfolio, like you don't really sell it, right? You can't, I could change my mind, but like there would have to be some sort of thesis breaking, or I'd have to find tangible exposure to generative engine optimization when it comes to advertising through AI capability. Like that is the glaring elephant in the room. What other company is going to be able to provide first party data for search for AI queries and returning advertised results, right? Targeted advertised results. A lot of these companies buy it externally, but Zeta is the one who has theirs first party, meaning that they collect all the data from the existing clientele, right? So I don't know any other company that does that right now that's growing at this scale. Maybe there is, or a lot of these walled gardens do it on their own anyway. But as a vendor, I don't know if there's another company that does that, and that's what keeps me in it, along, of course, with the execution. But if this thing goes to $10, I mean, that would suck. Right. But I don't know if this is going to go to $10 and the market isn't down.
Yeah.
Like, I'm not
I'd be buying at $10. I think I think that'd be a tremendous buying opportunity. I mean, obviously that's not financial advice, but just personally speaking, I think Zeta's the largest position in my portfolio. And if I saw this stock, understanding the company inside and out and having this amount of conviction in my thesis and doing the amount of research I have the confidence to just stand here and say $10, that's a stupid cheap price. And adding, I have no issue with that.
The market gets completely ridiculous when they throw everything out, right? So we've seen it happen many times. I mean, I guess when Zeta was like near $10 before, when Ronnie was getting everything, there was obviously a lot of micro hangover, especially with the litigation case and everything. And the market wasn't at all-time highs back then. So that kind of made sense, right? But here we are today where you have fundamentally a much better company. Who constantly raises guidance and continues to perform and has shown that execution quarter after quarter every single time. This is actually the first earnings call that I'm going to listen to live. The other earnings calls I've listened to was just recorded, or I looked at the notes or whatever. But this is going to be pretty interesting to see how it comes out live, especially with all the skepticism with SAS. As far as receiving a threat from Anthropic and a bunch of other tools and everything. So and we'll see. I'd be very interested to see what's going to happen. But yeah, I mean, it's no secret that a lot of these software companies are selling at cheaper multiples because of the fact that it's macro. Like guys, remember when Nvidia was $150 because we thought we were going to go into a massive bear market and financial conundrum? Look where it is today. That was pre-split too. So you know, it's the market. Yeah, or even DeepSeek too. Yeah.
I think we were talking about this last night too. I think this is more like a DeepSeek situation because it's not like economic. It's not macro driven. It's more so just fear based, and Wall Street's just selling now, asking questions later. And then once you start seeing some Wall Streeters, some big names start buying into these because, okay, cool, we just got 13 Fs and Warren Buffett sold Amazon and other big honchos sold XYZ, but that was last quarter. The 8% move down hadn't really happened until, this month. So yeah, I mean, it's just crazy. And it's funny that you brought up the Claude thing because Claude makes the commercials and they're funny and they're like, oh, we don't do ads, but OpenAI is going to do ads. But at the end of the day, can you hear my kid?
Yeah, that's
Yeah.
fine. Don't worry about it.
At the end of the day, they're going to eventually do ads. No one likes change, but eventually everybody changes. There's more ads nowadays on YouTube, on television, on XYZ, on Facebook, on Instagram, on TikTok. There's more ads nowadays than there was a month ago, a year ago, 2 years ago, 5 years ago. So eventually everybody's going to get to going after the ads on LLMs. It's just a matter of time.
Yeah,
But
and I
OpenAI
mentioned
is
this
gonna
last
do it
night
first.
too, Ronnie, about the partnership with OpenAI. I think a partnership with OpenAI is the most intuitive one for Zeta Global over something like Anthropic to start. Eventually, I think they'll remain agnostic and they're going to partner with everybody. But OpenAI is that status quo consumer sort of cliche LLM that everybody uses. Like everybody's wife uses OpenAI. They don't know what Claude is. They don't know what Gemini is, right? They have no idea. So when you're looking at consumer intent data and that first party data collection, there, and I mentioned this last night, so this may be repeating it for some people in the audience, but there, not all first party data is the same. The first party data that you collect on Meta is completely different than the type of first party data that you would collect on Netflix, right? The amount of rich signal information that you get on Meta tells you a lot about a consumer and what they intend to buy, what they interact with, right? Where on Netflix, you get first party data regarding somebody's screen time and what somebody's likely to watch. That doesn't necessarily help you market to that individual a sweater or some sort of like, I don't know, like Yeti mug or whatever it may be, or for Nate or Davis, like hiking gear or gym gear. You know what I mean? Netflix, that data that they collect won't benefit a company like Zeta Global overtly. But the data that's collected on OpenAI is going to be very beneficial for a company like Zeta Global. And I think mutually beneficial because Zeta has the ability, that omni-channel ability to market and get ads in front of that consumer, referencing their first party database in tandem with OpenAI's first party database. So when you have that pairing together, you have a very lethal marriage of information. And you're able then to target individuals with high degree of accuracy and high resolution so that you can deploy an ad in front of somebody and know that you're going to get a certain amount of ROI. That's why Zeta can come out and say, hey, for every dollar of ad spend, you're going to generate $6 to $7 in revenue. Like that's a remarkable stat. And I'm really hoping we're going to hear today on the earnings call some more commentary from management on this. But you know what? To kind of segue to the data point, I also hope that management has some commentary on the whole SaaS narrative right now because it's quite topical, right? And I think personally, this is my belief. Looking forward, I think in the SaaS world, we're going to delineate between those who have proprietary first-party data that can't be synthesized, that can't be reproduced, and is not open sourced, and those who do not have any sort of data moat. And the ones who do not have a data moat, their current situation, their current position in the market, it will be eroded by AI because the agentic bots will be able to utilize that data just in an open source manner, or either replicate that data from open source data and then produce a product or mesh a couple products together for some consumer or user or some sort of company, where if you have first party owned data, nobody else can access that data except for Zeta Global, you're in a very defensive position. And AI is actually going to help you accelerate your product and get that product to your customer in a much more convenient manner. Hence Athena, right? Athena is essentially just a massive agentic engine that allows them to deploy this AI agent throughout their entire tech stack, throughout their entire ecosystem, because it's layered with data and everything's in one location. So you don't need to go outside of that tech stack in order to, execute a command or, load a query or start a campaign or ask it information. We've all seen the demo videos, but anyways, I could go on forever about the data, first party data. I'll probably bore people. Davis, do you have anything to add? I know you've been quiet over there.
I found the EPS gap estimate.
Oh, interesting.
No,
is that
Yeah,
analyst?
3 cents on Seeking Alpha.
Okay.
Yeah, that's wrong. That's going to be wrong. No, I'm kind of quiet just because I'm a little bit sick. I think I was kind of zoning out, not gonna lie. I'm so used to watching you guys and being able to replay the video, and like it's just weird being here live. So it's just different.
You've been live with me before, Nate. We've done
I
it.
know, but and then I zone out there too. But no
Do you have
disrespect.
do you have a channel? June was asking if you have a channel.
Me?
Yeah.
I do, but I don't post. I have the Palantir sea shanty on there. That's about
Got
it.
it.
I love it.
No, with the OpenAI partnership, I still want to know more about that partnership. And kind of like you were saying, if Zeta and OpenAI actually get a partnership where Zeta can use that first party data, it would be just incredible because OpenAI knows everything about me. I think I sent you that one write up I did about me trying to figure out what sweater is this guy wearing. And then OpenAI was like, oh, it's from Polo Ralph Lauren. It's the cream one. It's this type of sweater. Do you want me to look at sizes or certain other brands that fit this criteria? And if they could, like you said, Zeta's omni-channel, they don't work solely with one company. And so if Zeta knows that I was looking at sweaters on OpenAI and then I go to Instagram, like Instagram's not going to know that I was typing on OpenAI about sweaters. But if both companies use Zeta, the connection is there, and then that's where that 6-to-1 ad spend comes into play. Like they're not wasting time trying to figure out. Okay, well, they're not even wasting time because they have no idea what I looked at. But if you're able to connect the dots, then they do know what I've looked at. And so I'd like to hear more about the OpenAI partnership because I'm still kind of in the dark about what exactly the partnership means.
Yeah, I'm looking for some more commentary as well. I know that Chris Greiner, the CFO, he gave us a little bit of color at the Needham conference more recently, but he kind of said that it's in its first innings, that this partnership is designed to evolve over time. And I've put a lot of thought into what I think this could become. And if I ever have the opportunity, I'll ask this question. But what I think would be tremendous for something like Zeta Global is if they do something similar to AppLovin. And AppLovin has developed something, let's call it a mediation platform. It's called Max. And essentially it's like a massive SSP where anybody with AppLovin's SDK, which is a software development kit, applied to their app on the back end, they're able then to kind of sell ad space and say, hey, I have ad space on my app that I'd like to sell, right? And then on Max, which is a mediation platform, essentially just imagine a massive auction platform, right? And people can come in and say, hey, I'll pay $5 for that ad space. And another guy comes in and says, I'll pay $5.50. And another one says, I'll pay, $10, blow you out of the water. They get that ad space and then they can deploy that ad, right?
Right.
I think Zeta Global is positioned in a very strong spot in order to do that, but for omni-channel marketing, right? Omni-channel means that they deploy on any channel. It could be CTV, it could be social media, it could be, in person, it could be display ads, anything. It could be audio programmatic ads on Spotify, it could be on Netflix, whatever it may be, on Amazon. They can reach you anywhere. Where AppLovin's platform is designed for mobile gaming. Now they're bridging into the open web, but that's a whole nother conversation. But what I'm saying is that Zeta Global and this relationship with OpenAI could be the start of something very unique. Where at the moment, Zeta Global doesn't have Meta and Google and Amazon as customers. They're partners in a sense because Zeta deploys on their platform and allows for their enterprise clients to go and buy essentially ad space on their platform using Zeta's platform, right? Or Zeta's ecosystem. Now, what's unique about this partnership with OpenAI is that Zeta is, what did David say? It is integral or native to OpenAI at the core, and likewise. So meaning OpenAI is native to the core of Zeta or something like that. I'm trying to remember the exact phrasing, but my point being is that if this is a two-way relationship, then perhaps what OpenAI is doing, and we know that they're developing this, appetite to display ads, and Ronnie kind of just talked about that. Sam, all of us talked about that. Perhaps they're looking to make an ads platform very similar to something like Meta, where somebody could go on and buy Meta ads and display Meta ads or Google ads like on Google, but for OpenAI, because this is a massive first-party database, right? And they want to deploy ads on that platform. However, when somebody goes on Meta and they buy ad space, those ads also can be displayed off of Meta's platform and onto other apps. And that's what they're doing with AppLovin. So what I'm thinking here is that perhaps if OpenAI develop some sort of interface so advertisers can come on, just like they would log on to Meta ads and deploy ads onto OpenAI. Those ads then can be projected onto other platforms using Zeta Global's infrastructure. And Zeta Global could almost be that highway that carries ads not only onto OpenAI, but off of OpenAI onto other programmatic channels, right? And I think that that could be a huge thing to accelerate Zeta Global's revenues in the future. And that would also be the template for this mediation platform, because then the prerequisites would have been met. And it means that somebody like Meta or Google can come to Zeta Global and then also achieve omni-channel marketing, which would be quite impressive in my opinion. Anyways, I know that's a long-winded sort of statement, but and it may be sort of out of the realm of some people's sort of knowledge base, but if for those who have followed, I think the potential here for this company long-term, about like 10 years, 5 years, 10 years down the line, because we know AI is going to progress rapidly and OpenAI is going to want to stop this cash burn. Because right now, I think they're at like $15 billion cash burn yearly. So they're going to want to deploy ads meaningfully in some way. I think this relationship with Zeta Global's only beginning, and it's going to get much, much more, rich in the long term. Let's put it that way. Those are my thoughts.
Yeah, that was amazingly put. A lot better than how I tried to word it.
I keep hearing this cat. Is that me or is that somebody else?
No,
I
that's
don't have a cat.
that's Ronnie's kid, right? Or I don't know.
Oh, I hear a cat.
No, I'm muted. My little gremlin's
Let me go check,
screaming in the back.
Someone check that cat.
Check that cat.
Probably hitting some Zeta calls or something. It's like, what's going on here? We bullish? We not bullish into these earnings? What's going on here, guys? Come on.
I couldn't imagine buying Zeta calls right here, like some short-dated earnings call.
They're pretty beefed up. They're pretty beefed up. I was thinking about buying some out of
The
the money
IV is
yesterday.
probably insane on them.
They're
if you would have
pretty
bought them
beefed
yesterday,
up.
it would have been nice.
Yeah, I was thinking about buying
Did you
yesterday.
guys
I'm just
know?
like,
Did you know that the same quarter last year they did 7 cents of EPS?
yeah, but that was
like an election year.
Yeah,
True.
that's true.
Last year was not an election year.
2024?
Yeah.
Sorry. Yeah, 2024 was.
Q4
Yes.
2024.
Sorry.
I forgot we're in 2026.
Yeah.
What's up, Clayton?
Nick,
Yeah.
going on with your OpenAI thing,
Yeah.
I think OpenAI is charging at the higher end for their CPMs.
Yeah.
And so it kind of just shows that if they're going to charge this much, they're going to charge advertisers this much. Like advertisers are going to want to know that their ad spend is going to hit the right people. And what better company than Zeta to make sure that the ads that you're putting out are going to target the right people? Because no one's going to pay at the higher end if they're just going to waste it.
I agree.
So
I agree. I think that the only reason why Zeta is able to do that is because they're first party proprietary data. Yeah. And I go on and on and on about this, but the reason why I go on and on and on about this is because that is actually such a defensible position in the current market dynamics. When the threat of AI and agentic bots and what is this, like OpenClaw or whatever they call it now, right? Claude bot or whatever you want to call it. It's going to destroy a company like Zeta Global. I literally laugh because it makes zero sense. They don't have access to that proprietary data. All the decisioning that's occurring on Zeta Global is sourced from that proprietary data. Nobody else in the world can touch that except for Zeta Global. They don't permit. It's not permissive. They don't give it to anybody else. But it's permissive in terms of what they collect from individuals on their owned assets. However, that data isn't collected by anybody else. And when they collect that information, nobody else can access it. And actually, the only bots that can access it are Athena and the automations that Zeta has on their own tech stack. So for me, that is one of the strongest positions to say, hey, you know what? AI is actually going to help us accelerate our revenues, help us accelerate our business and grow our business. And any talk that, hey, Zeta is a dead company because of AI, I think is absolute lunacy. It makes zero sense whatsoever. And over the next couple of months, I think what the market's going to do is it will delineate between those who are literal data kingpins and companies who have a large proprietary first party database and those who do not. And the ones who do not we're going to ask another question. Do you have any defensible service that AI can't do? Because if you don't, then you're in a really bad position, right? And I kind of think personally, and I know Sam's going to comment here, but I think that's where the market's going to go over the next couple of months, and it's going to take some time to weed that out.
No, I do agree. I mean, data is obviously that matters, and it's one of the reasons why you see Google continue to lead with the AI race, is because they have access to all of this first-party data through the search engine optimization, all that stuff. Like they've been running the search market since early 2000s. As soon as they took over Ask Jeeves, Yahoo, and all those other companies, right? And they've been dominating, and they have that data to work off of. OpenAI is starting to collect that data, but they haven't been collecting for 2 decades. I think that's the crux of the position, is that you need to have the data in order to back it up. Otherwise, you have to buy the data somewhere, right? So who do you think is going to go to Zeta for this data, right? Especially since that they have most of the Fortune 500 companies. If they are able to do that, people are going to pay up for this data, and that is something to defend with Zeta. As far as having that data available, all you need to do is, you need to partner with us. You want that's going to be it right there, to be able to get your hands on the data. And all these other companies that don't have it, yeah, no, I agree with you. That becomes a question. Like Workday, Team, or Atlassian, and everything. All these software companies, like the only proprietary data they have is through the companies that do use their own platform. And even then, it's like they can't even sell that data anyway, right? So we don't know exactly what these partnerships or the clients entails, as far as NDAs or whatever type of compliance agreements they have with these clients as far as selling their data. But I'm sure they thought about it. Huh?
Are you talking about Zeta? With their
so like what happens with all the client information they have? Are they allowed to sell this data to vendors?
Yeah, so the client data is, when it's added to the CDP, that's a protected ecosystem. Zeta can't touch it because Zeta can't share it. Zeta can't monetize it. The only thing they can monetize is Zeta's owned proprietary data. That is that 550 million identities that they have. That pairing together of that client's data set and Zeta's data set gives them that high resolution, which says, okay, we already know who your customers are because you just uploaded them all. We're going to take those out of our own data set, and we're going to be able then to market to you and take your product and market to these new potential customers, but also help you retain your existing ones and grow that audience. So Zeta's not able to monetize that. The defensive asset they have is the owned asset, the data that they've collected from their owned assets, like Live Intent, for example, which is like the world's largest newsletter entity, right? And Marigold, the Marigold SKU data, like that's a whole different type of first party data that we haven't even talked about. But SKU data, we talked actually about that a little bit last night, right, Ronnie? Nate?
Yep. Yeah, we did.
Yeah, so I won't repeat myself too much here, but I'll bore some people and we'll lose viewers. But
we only got 7 minutes left. So.
Yeah. Anyway, so how about we pivot off of data, because we'll talk about this so much on the call probably. I think it will be topical. This is a great time to kind of ask everybody. We'll start with Davis, then we'll go Nate, Sam, Ronnie. What size, if you're comfortable declaring, what size of a position, like in terms of percentage in your portfolio, is Zeta Global? Is it number 1, 2, 3? What is it?
Palantir is number 1, obviously, but
sing us a song, man. Come on.
Dude, the rap is done. It's so sick. I just need, I'm going to drop it at like 150. So Zeta's sitting at about 20%.
Wow. Okay. Nice.
Yeah, I need to do the calculation for money.
It's my second biggest position.
Okay. You want to add more, or are you good?
Dude, I can't. That's the thing. I'm already in margin because of some companies. But I mean, it's a big position. I've publicly posted my position before.
Yep.
But I've increased it about 50% since then. So I've got a lot.
Okay, Nate, how about you? What's up?
Yeah, I just did the math. It was like a 22% position when it was like $24 a share.
Yeah.
Now it's like 17% because it's gone down a bunch. But yeah, I'm pretty comfortable being around that 15-25% range.
Okay.
And keep it around there as well. But
what is that?
Yeah,
10
super
shares?
bullish.
Just kidding.
Okay, Ronnie, I know Sam's off cam right now, but Ronnie, what are you at in terms of allocation? You want to show us your screen, Ronnie, maybe?
I think the red would be too blinding, wouldn't it?
No. But like, you have your portfolio or whatever. You can show us your whatever.
Yeah, on Blossom. So like, I'm a connoisseur of portfolios. I Dude, every time I want to talk, dude, my kid.
It's okay.
Go ahead, Sam. What's your sizing?
Zeta is somewhere around 6 to 7%. 6 to 7%. It used to be around 10% when it was $24. And I also had leaps and everything. But once we broke some of those moving averages, I did get rid of leaps and reduce risk on options portfolio. But I still do have my shares. So I'm comfortable with that size. I'd rather let it appreciate in its own versus anything. And plus, some other positions that I had have appreciated a lot throughout the year. So they've continued to reduce the concentration of Zeta. Being that my portfolio has basically been finite since the beginning of the year. It was basically whatever the market's doing, right? So I think it's around there. It might, depending on how the earnings goes, it'll go up or down. But I'm not planning to add to it. In this market, I'm not planning on playing any leaps or anything. I did get rid of those. So, if it goes up, that's great. I still have shares. But dude, this is not the market where I want to be levering up in leaps and stuff.
Nick, what is it for you? I think you've shared before, but
Yeah. So as of today, mine is at 27% of my portfolio.
oh wow.
Yeah, 27% after today's rally. So if we run hard tomorrow, guys, this is a 30% position plus.
Nice.
If we run hard tomorrow, he's gonna come in with a crown, a chalice,
Gucci.
Dude, we'll be like,
Yeah.
we'll be on the street,
That
man.
would be crazy. That would be crazy. I mean, the market makes some crazy moves, right? If SAS is really back, then I think the stock can easily come back.
Yeah.
It's
This is
literally
what
the market
it
that
looks
brought
like
it
right now,
down.
people. So that's inverted, but Nebius is my second position. Then it's Meta.
Beautiful.
Then
Talk
Are you
about
Google.
still on
next.
Pat?
No, I'm waiting to see how that pans out a little bit.
That's good. That's
yeah.
good. That was a disaster.
Yeah.
I had to cut that one when it broke the 200 day. I was like, I'm out of it, and it's at $10 now. So
Yeah.
you don't make everything, but clearly Zeta is something that I held on to regardless. But yeah, for me, 6 to 7% is just I don't like to make positions more than 5.
No, it seems intentional to me. It seems intentional. That's
6, 7.
Yeah.
I think you like saying
I'm an old fart, man. I didn't even think about that until you just said it.
Zeta new highs of day.
Such an old
new
fart.
highs in the
New
day.
highs
What do we
of
at,
day.
Ronnie?
What do
We
we
just
got
hit
here?
1687 new highs of day.
Wow,
There
up
you
12.3%.
The market is actually
Last
ripping
2
into
minutes.
the low, so,
Last
yeah.
2 minutes in the market, they ran it up. Dude, I can't even tell you my position sizing because, like I said, I'm a connoisseur of portfolios. I like to build a lot of portfolios. I have a Leaps portfolio. I have my public Blossom portfolio where it's 22%. Free Blossom download, link in the bio if you want access to Blossom.
Did it.
So, yeah, I don't even know. It's probably around if I added up all my portfolios, I have a ton of leaps. Man, I was once upon a time way up, and I was joking about my wife telling me to sell, and it's kind of funny because then from that
Should've
point
listened.
we went so far down. Obviously,
You didn't have to say it.
I know. Well, I said it as a joke, as a funny, but then it's it was so true. It's I posted that, and it was 30% up, 50% up, 40% up, and now it's 30% down, 50% down,
Yeah.
40% down. But at the end of the day, with leaps, right? You have they're 2028 leaps, so I have a long time, and I fully plan on exercising all of those leaps. The only bad thing about leaps, is if we did see some macro environment issue that like I said last night, Nick, if it lasted until first, second quarter of 2027, I don't think $17. $17.
Oh,
on
wow.
Zeta.
There you go.
Let's go. We're up
13%.
13%. Okay, we're about to close here, guys. Market
Dang.
close 4 p.m. We should be getting the drop within 5 minutes.
1698 we close, fellas. Let's
Wow.
go.
Okay.
That's
Wow.
amazing.
Okay, let's go. It's
That's
game
insane.
time.
All right.
We're
All right,
about
Let's
to
go.
We're
Let's
either
go, that
eating steak
candlestick.
tonight.
We're gonna be
or
memes.
Let's go.
We're gonna be memes.
Should we throw up a 1 minute chart, boys?
Yeah, throw it up. Let's go.
No, man. Let's throw out the 5-second chart. Let's get really
Can I,
degen right now.
yo, should I screenshot and post the 1 second chart?
I love how 17 is so great now, but 3 weeks ago we're like, why the fuck is it 17?
No,
Yeah.
It
You have to
was
say that,
brutal.
Davis.
A lot of people
Dude.
are freaking out, but this is the core zone that I've been accumulating, right? Like I think my average is
Yeah.
around 1738. When I first started buying shares around $14. So
Same.
Humble brag.
I'm about break even over here, but I'm
well,
not here
no,
to break
Sam
even.
said this before, but Sam said this before. Like at least I believe you said this before, Sam. But your cost basis matters, right? Like
It
where
does.
you
It
are in
does.
a
Yeah.
position really matters.
So, like, let's say hypothetically Zeta runs to like $30, right? And then everyone's like, "Oh, let's go!" Actually, no, it was at $24, right? And then when it dropped back to $20, I was like, "Oh, well, this isn't so bad. Yeah, this isn't so bad." And
Yeah.
It does matter. It really matters. What's up, Jesse?
Yeah, Zeta's the first stock I started averaging up on.
Zooming in
Usually I don't
on
do that.
the 1 second. Are you serious?
Oh, stop it.
Chart.
I'm over here like refreshing this tab. Like
We'll do 5 minutes.
Like degen.
1701,
1 second chart.
1703.
I know you played the
Oh man, have you guys remember the? I don't know if you guys have been in the finance community for a while. But you guys remember that meme of Amit doing PayPal?
Oh yeah.
Yeah, no, that was a great one, dude.
Here we
Him
go.
and-
Here
him
we
and
go.
Adam.
And then it's
Yeah.
down 20%.
Amit stopped
It was-
looking at the chart, and then Adam's like, you can see his face. You can see his face as soon as the candle went south. And Amit was still cheering. That was a good one. That was a good one.
Oh, that was. I feel like it's gonna happen to us. Like it's 17 boys, and we're gonna. Oh man, it's 1350.
Yeah. Their reaction
Ronnie, I'll let
changed.
you know when it's up. I'm refreshing the tab like
Yeah, I'm
crazy.
refreshing
Okay,
the
cool,
tab like
cool.
crazy too.
Yeah,
Be right back.
if you watch the candlesticks, do your
Yeah, do your
All right, I'm
candles
gonna do
first.
some analysis. So we have what looks like a
Libra
breakout
is
here.
5%.
Um,
Mercado Libre 5%.
5% up.
oh man,
That is a fun stock to own. Back in the
Who?
2000s, Mercado Libre.
oh,
I've had that thing for a long time.
I've actually thought about adding that. They do what they're like 20 something quarters consecutively. They've had 30% revenue growth or something absurd.
I mean, it's just I feel like when it comes to stock, just buy at the 200-day and just pray after that. But
Yeah.
Workday is down 10%. I mentioned that earlier, man. This is open to disruption. Like this is going to be one of those companies where it's just I don't know what they're going to do with AI because you can automate anything that they do. But
The best
we'll
thing
see.
for them, I'll give Intuit this, coming out and doing a partnership. That is what's going to save these type of companies.
Yeah,
100%.
Mercado Libre 10% up. Let's go.
Okay.
damn.
Yeah, I'm curious to see these CEOs like panicking.
What if Zeta just
emailing or
floats to
calling
20
Claude,
right now?
trying to partner with them? Yeah,
That'd
they
be
get to
amazing.
20. I mean,
Dude, we're just
Tell
going up.
everything. Just kidding.
I mean, Ronnie,
I'm
we were
so
talking
scared
about this
looking at
last
this
night.
chart right
Limit
now.
order.
I'm so
Limit
scared
order.
looking at this chart right now.
Ronnie, last night we were talking about this, like what could move this narrative, this SaaS narrative right now. And I think Intuit, signaled something that I didn't really think of last night, which is these partnerships. If these companies keep coming out and saying, hey, we're going to partner with Claude, like this, they're going to help us. And then if we have the same rhetoric
Who did Intuit partner with?
with Claude,
Claude.
Anthropic.
Oh,
Yeah,
okay,
Anthropic.
gotcha.
Which is the dumbest thing ever. The dumbest thing ever. It's just like
Yeah.
just yesterday they were selling the stock because of that. And dude, this is all a sham. I'm not gonna lie. This is all like literally just
100%.
manipulation.
Dude, they are gonna. These stocks are gonna rip. So not all of them. Oh god.
Dude, I'm like a degen refreshing this IR page.
I know you're
Oh,
looking
no.
at 1 second chart. You're freaking out over there, man. Come on.
No, it's 5 minute. It's 5 minute. It just went from like 2% up to
Oh.
down.
No, I wouldn't worry about it right now. I just gotta wait.
it's
But
not
when
even
you
out
say
yet.
Yeah, it's not even out yet.
Yeah.
So I don't. It's probably the people watching this channel.
Like these
You're like,
these
"Fuck you,
degens are
Ronnie."
hyped.
They're throwing money at it just to see a reaction from us.
Does anybody know if Amit's going to listen to the call?
Oh,
I'll force him. Oh shit.
There you go. Hit the tape.
Yeah, I'll force it.
All right, we're gonna get mean. We're gonna get mean. Please stop.
Stop it. Stop it.
I'm not getting excited till the oh, there you go. Okay, I'll take that. I'll take that.
How about 4?
It's 405. Come on. It's got to be something out.
Come on, 6,
Yeah,
7.
I'm looking. I'm refreshing like crazy. I see nothing.
Same here, man.
Come on.
Nothing yet.
Trading view isn't as funny as when Amit's doing it because Amit, you could actually see like the candle move up and down. Trade view just like stays and it refreshes every once in a while. But
Bam, bam, bam.
yeah, that's funny.
Oh, it's out.
Oh, it's out. It's out.
395.
Nice.
Oh, who said
my
394,
God, guys.
baby? Let's go.
Oh
is
my
nuts.
lord.
Guys, 8 consecutive beat. No way.
Let's go.
395.
No way.
395. That's crazy.
Gap
What
net
was the
income of
guidance?
6. Gap net income of 6.5 million.
No way.
Let's
Okay.
go.
They beat
Let's
the
go,
guidance in that one.
Let's go.
They increased their full year 2026 revenue, adjusted EBITDA, free cash flow, and gap net income.
Dude.
They also increased their 2026 first quarter to 370 million versus 362.
Wow.
They increased their full year guidance to 1.75 versus 1.73.
There you go. There
What's
you
up?
go.
What's
Billion.
up? What's up, Nick? I told you.
They also increased their 2028 revenue target to at least 2.3 billion versus 2.1 billion
Wow.
previously
That's
stated.
huge.
Dude, they
Dude,
Keep reading some
crushed.
stuff off here.
Press release, presentation. I got it up here. Ooh, baby.
Well, look, the candle. Go to the candle.
Okay, wait, yeah.
The fact that it's down right
It's so
now.
Go up.
muted.
Go
it's
up. Go
silly.
up.
It's silly. After
We're
what you
up
just told us, what
14%.
you just said, that's crazy.
Navitas
man.
is up 10%. Axon's
Guiding
up
to
10%.
full year 2026 gap net income. They increased their free cash flow to 231 million versus 224 million for full year 2026.
18 straight beat and raise. FY25 revenue growth of 30%, 27% excluding Live Intent Marigold Enterprise business. Adjusted EBITDA growth of 44%. Free cash flow growth of 78%. 13% margin. Broad-based industry revenue contribution. 2026 calls for a 6th straight year of revenue growth of 20% and free cash flow. Already knew that. Guiding expectation of 92 basis points. Guiding to GAAP net income positive in fiscal year 2026.
Yep.
Wow.
Also, the revised year-over-year guidance for Q1 now is a growth rate of 39 to 40%.
That's crazy. Guys, this is great.
Yeah, this is I did not expect
Let's
395.
go. Woo! Guys, wow.
Blow the candle up.
Customers grew to 184, an increase of 36 customers, or
Yes,
24%
crazy.
year over year. That's unreal. Holy cow.
Yeah, no, that's good. No, that's good. That's good news.
That's unreal, guys. I think that's their largest subscriber, or sorry, their customer uptick in years, frankly.
It's 20, but like 24%
That's
on super
crazy.
scaled compared to normal scaled 14%. So they're growing. They're 1 million plus.
Hold up.
Super scale's 1 mil, right?
No. Sorry, Q3 they went up at 25% year over year. So
Yeah, 1 million plus for super scaled.
in the last 2 quarters alone, they increased by 50%. That's crazy.
Well, I want to see what they put for the Fortune 100 companies.
Okay, coming
Yeah.
back
Is
to
it-
green here, 3%. 3%.
This is a knockout quarter, like we
Yeah,
called.
this is great.
I did not expect it to be this good. I'll be totally honest.
Dude, I cannot wait for these interviews, man. This is gonna be awesome. Now that it's
Yeah.
out,
Dude, they-
Nick.
6.5 million of gap net income. Holy crap!
Wow.
They delivered 1.305 billion in revenue for full year 2025, so a 30% growth rate for the full year of 2025.
Nate's doing 3 plates tonight.
No,
better.
that's Davis.
Three.
I wish I
Davis,
could do 3 plates.
tonight. 3 plates.
They now serve 51% of the Fortune 100 versus 44% last quarter.
Okay,
Oh,
so there was some
nice.
duplicates there. I see.
Yep. So seven more
Yeah, that's
Fortune
awesome.
100 companies
That's
versus
awesome.
last quarter. So now they serve over half
Oh, there
of
it
the
is.
Fortune 100.
That's crazy. For a
insane.
$4 billion company. Think about
Also,
that.
look at that. Hold on. Look at the right. They have 4 of the 4 largest. They have all the telecommunication companies.
Yeah.
4
Yep.
out of 4.
Well, they have AT&T now. If they didn't already,
And we know that
they're
automotive
well
company is
positioned.
Ford, by the way. That is 100% Ford.
Okay.
That's good to hear.
Who are the other two? Who are the other large Toyota and Honda? Probably.
Yeah, probably.
Probably. Although Tesla, I feel like could be in there.
Tesla doesn't do ads.
Yeah. Hey, look at that. Total revenue for 2028 is now
Look.
2.3 billion versus 2.1.
Yeah.
That's wild, guys.
Yeah.
That's
Look at
10%
this.
increase.
Look at this measly analyst over here. He got it right.
Oh wow, look at him. That's hilarious.
He had it right.
No way.
2.27. He's like, yeah.
And
these
that's again.
sandbags. They have like
keep in
zero
mind.
analysts, dude. They
Keep
have
in
like
mind,
zero analysts.
last quarter they got it for 2.1 for 2028. So they're, to me, it suggests they're sandbagging it still heavily for
Of
2028.
course.
And they
No,
just
they are.
up 2026, like you just said. Like
Yep.
they up next quarter. It's like they got a money glitch going on here, man. Like they're just like, yeah, whatever.
That
Like
was a great
it's
quarter.
not even up, but it did end 13% up, guys. So
I know that's the thing. Like, when it makes that big move, you kind of already did it beforehand. But we'll see, man. They could.
this is
anything
blowout.
can happen. with
Just
SaaS
remember,
stocks, yeah.
like we were at 24 and nothing has changed besides
Yeah.
Claude, and then they come out with these numbers, and it's like Claude who?
Axon is up 20%, guys. 20% Axon.
Guys, they're sandbagging like crazy because they're guiding for. So I'm looking at the 2028 update.
Yeah.
At the moment, they're saying the previous 2028 update was 2.1, and now the updated one is 2.3. Correct? They're
Yep.
attributing an extra. What is this? 190 million from Marigold Enterprise in 2028. Marigold did 190 million in 2024 financial year, like full year financial year. Like that was disclosed as a part of their part of the acquisition. So I think they're sandbagging heavily. They're essentially saying that Marigold is going to be flat from now
Yeah.
until 2028. That's ridiculous. That is absolutely ridiculous. They're poised to absolutely smash these numbers, in my opinion. That's crazy. I love it though. This is a new the KPR reporting.
Yeah,
Yeah,
that
I
was
saw
new.
that
That's new.
right here.
Yeah, that's new. Evolving KPI reporting to 1 million super scale. Interesting.
Free cash flow margin decreased a little bit to 13%.
13%, right?
Yeah. Versus
No, it was at
15.5
12.9 last quarter, was it not?
No,
15
it was like 16 or 15.9.
15.6
But-
last quarter.
But we just got to see what it was last year.
Q4 last year was 11.3%. So increase year over year.
Oh, there we go. Or it's 10%.
Oh. Fiscal
10%. Either way, 10% to 13%. So
Yep.
we're seeing jumps every quarter
Wow.
over quarter, year over year. So
So more than 90% of revenue growth from 2020 to 2025 has been driven by at least $1 million customers. So customers who spend $1 million or more a year, over 90% of the revenue growth has come from those.
and they're growing those the most.
That's crazy, man.
20-some percent.
Yeah, 24% year over year.
Yeah,
That's
insane.
insane. That's wild. Okay, so Q1 guide.
369 to 371. So remember, it was 315.
Guys, they're giving a midpoint for financial year 2026 of 35% year over year.
34 to 35. Yeah.
That's the midpoint. So their
Yeah.
bottom before was 34% year over year. Interesting. So that means they think the top end is probably what, like 36 roughly?
Yeah, probably.
Okay. The midpoint for Q1 is 40%, man. It was
Yeah.
Whoa, that's huge because it was
315.
yeah.
Insane, dude.
That's ridiculous. That's crazy.
And dude, like, okay, so they raised it to 30 to 35%, 35% for the midpoint, but yet they come in like every quarter, it seems now, and they raise the whole year's guidance. So what if they just keep doing that and then we end the year at like 40% plus?
That's wild.
Yeah, like
The stock is not moving on this either. It's just taking
Yeah.
the move from today. That's it. I'm fine.
Yeah.
All right, SaaS
Someone
stocks,
do
dude. SaaS stocks. You just gotta wait. I would prefer this than for it to be like up or down like 8% reverse.
Yeah.
This is
Yeah.
fine
the
with
fact
me.
the fact it's holding, if it just holds 17 and we stay above 17, like I think we found ourselves a bottom at 14 something. Honestly,
I don't want to spit out stuff like that. You don't know where the bottom is on these stocks, man.
Guys, free cash flow was up 78% year over year. That's ridiculous.
Guys, I just got a text from my brother who doesn't know I'm like really. He knows I'm into investing. He's like, "Hey, if I'm investing $60 into a stock, what should I put it in?" Gotta
Well,
Let's
let's
hit it
see.
right now.
gotta
You get
tell him
4
Zeta.
shares. You
Tell
get
him what
4
to do,
shares.
so ask him if he wants the financial advice.
Yeah, you want some financial advice?
Make sure you say that too. Be like, hey, I'll give you this financial advice. Put your 60 into this.
It's just so funny.
So they just destroyed everything.
Yeah.
There you go.
Short earnings,
Got a
guys.
little-
And they
Yep.
still sandbagged.
Got a little
Cool.
bit of a pop there. A little bit of a
Oh, we're up
pop.
2.5% now.
Yeah.
Nice.
So
Yeah,
now
the
everybody
boys
on
in the
X
call.
can go back to talking about Zeta again.
No, not yet. Not yet. I don't want them to
I'm just kidding. I'm just kidding.
I like that
You
they
guys are fine. Everyone
confirmed
else-
full year 2026 guidance for GAAP profitability. Just even them saying
Oh
it,
my
I like
goodness.
that.
Dude, Workday, I don't know, man. This is a really good company too, but it's just getting killed by this AI narrative. Oh, Transmedics is up
We're still doing
7%.
six times on ROAS.
Bro, what? No.
Imagine when that's 7. Imagine when it bumps up to 7. Like, oh
God
shit.
dang it. 6 to 7x?
You said Row, like Row, the GLP company?
No,
No,
ROAS.
no.
Return on ad
ROAS.
spend. The
Like for
acronym.
every dollar spent, they return $6. 6 times.
Got it. They said ROAS.
Sorry, repeat that. What was that again? Sorry, I tuned out there, guys. I got
No,
Okay.
it's what we already. It's still 6 times.
same old. Yeah.
Yeah.
It's going to come down to
Nothing I-
commentary now. This is great.
Yep.
The
I'm
thing I don't
ecstatic,
like
guys.
is nothing with these slides, anything about Athena. Which, it's okay. I just don't
You already went
understand.
through all of them. There's nothing.
Yeah. We'll just control F Athena.
True. Well, I mean,
but-
we do have to realize too, though, right? This is for last quarter, and they said
True,
that
yeah.
the full release would be by the end of the first quarter of
Yeah.
2026.
For
So, but yeah, and I get it. Yeah, I mean, I want to know more about it too.
Yeah.
Guys, they're very conservative with their political spend too. Wow. So 2026 guidance across the board each quarter, they're just saying year-over-year growth of 20%. It's just an arbitrary number they're assigning. There's no way that Q1 2026 is going to have a higher political spend than in terms of growth than Q4. There's no way.
So, U.S. individuals providing permissions to online tracking by agreeing to publisher terms of service, 245 million, the count as of November 2024.
Repeat that.
U.S. individuals providing permission to online tracking by agreeing to publisher terms of service is 245 million, and then via email it's 110 million. Zeta Data Cloud counts as of November 2024.
Yeah, they haven't changed that number.
They haven't.
No, that number has been the same since 2024. So I'm curious. They're not providing us a lot of information yet. So perhaps with what's happening here with Marigold is that the integration of Marigold Enterprises has not been completed. Obviously, I wouldn't expect that yet. It was just announced last quarter. So maybe by Q2, Q3, maybe Q4 at the latest, because they have a timeline internally of 12 months. They don't acquire a company if they're not convinced that they can incorporate into and integrate it into Zeta Global natively down to the the tech stack layer within 12 months. Hopefully after, and this is what I'm kind of thinking out loud right now, after they do that, we'll get some more information in terms of data and the size of that data set increasing. Sadly, we don't have it yet because with this current market narrative, it would be wonderful to say, hey, Zeta is actually growing their database rather than losing.
Yeah. Yeah, I think they're growing it. I mean, they showed January 2024 is 241 million. Now it's 245. So they're growing it very slowly. on the data side, but yeah.
They didn't have a slide on SABC, stock-based compensation. I don't think.
Yeah.
They've been able to keep those under control, but hold on, let me take a look at that one because
In the footnotes, it says 43.7 million stock-based compensation.
Yeah.
What were we last quarter?
Last quarter 45.6, 46.5 previous, 42 the previous one. So tick down slightly,
tick down.
But listen, the important part is with SBC is that they're keeping it under control while the revenue is increasing. So
yeah, 100%.
Yeah, year over year.
That's what they showed on their third quarter slide. They showed that. I don't know why they're not showing it on this one.
Yeah, it's interesting. It's not in here because they did say in Q3 that it was going to be, they at least projected it was going to be somewhere between 3 and 4% of revenue in 2026 full year.
I love the company, obviously. I just know people are that's one of people's first things they always say. Well, what about the stock-based comp? What about the stock-based comp? Which we already know with these growth companies, like it is what it is, dude. Like Palantir,
those are people that don't. To me, those are people that don't invest in SaaS. Like
100%.
Stock-based comp, don't invest in SaaS.
It is 100%. Super annoying. People are like, "Oh, the SaaS company sells it like 100 times earnings." It's like, dude, get out of here, man. You do not understand SaaS stocks.
Yeah. No, I get all that. I'm just like, you just know people are going to nitpick it. People want to nitpick this stock. Like that's all I'm saying. So like not having it in here, it definitely is like a.
Yeah, I wonder if they just think like the story is now gone of like the bear case for it. So maybe they're just like, yeah, we don't even show it anymore, sort of thing, which is interesting.
Perhaps. I mean, you know what, guys? An analyst is going to say something. It's topical, right? They're going to bring it up. I know for a fact they will. They did last call. So something I want to look at here, Ronnie. If you go back to the slide 10.
I was just trying to see if there was anything else.
Oh, they showed a stock-based comp and the reconciliation for adjusted EBITDA and adjusted EBITDA margin. Just not a whole slide for it.
Did they? Okay.
Yeah, if you go to, well, I guess show this first.
Go ahead, Nick.
Oh, slide. Oh, sorry. I'm looking at the wrong slide. I'm just looking at the last one. So go to the next slide, 11. Okay, so this is an updated chart for full year 2025. I find this is interesting. So if we look at 2023 saw consumer retail at 22%. So we had a 2% gain in consumer retail in 2025. We had a 1% gain in, sorry, no, that's different. They changed the color. So insurance was number 2 in 2024 at 10%. So travel and hospitality took that second place spot, which is very interesting. Travel and hospitality was at 7%. So travel and hospitality, there is a big customer.
Damn.
Marriott, right? From their Marigold acquisition might have been a part of that. Could be,
but again, that's 2025. So we're talking entire year, right? So that wouldn't have been integrated yet. So we're looking at a big new customer there.
Yeah, stock's just flat.
Let's bring up that chart again.
Yeah, what slide was it? Micro to macro says it's better not to have a gap from going too high in after hours. 100%.
Yeah, that's true.
Yeah, no, that's true.
Technical standpoint.
Yeah, shout out to him, by the way. He was sharing our stream earlier today.
Yeah, I appreciate. Yeah, we appreciate it, man. Yeah, for sure.
Jesse Dow is fucking awesome, man. He's a good guy too. He's been giving away like Cybertrucks. That you guys get a Cybertruck from him? He sent me one the other day. Oh, he didn't give you guys one? Oh,
yeah.
My bad. I think he told me not to say anything. No. Shout out to Jesse.
What slide, Nate? The EBITDA one?
Oh, so there's a non-GAAP earnings per share reconciliation is shown there, and it's also shown in reconciliation for adjusted EBITDA slide. Sorry, I should probably give you the numbers. So that'd be way more helpful. Slide 46.
Thanks. There we go.
Stock-based comp under the net loss part. So we kind of can see that it wasn't like you said a whole slide on its own, but they still showed it a little bit more than just a footnote.
Yeah.
So 43 million versus 45 million the last quarter, which we talked about.
So down year over year. So I mean, it's all we could really ask.
And you can also see the full year guidance too, like 2021 versus now, they've decreased every year for the past 5 years. So.
Yeah. Dude, I just like they literally delivered on everything, man. Like they're net profitable. They're saying they're going to be net profitable for the entire year. they're guiding midpoint 35% revenue growth. I mean, the funny thing is, if we were like at $24 right now, and like this whole SaaS narrative wasn't out there, then we'd probably be approaching like 20. Like we'd probably be climbing right. That's the funny thing about it all.
Yeah,
it's just because now we're at $17 because we fell so much. So like getting a crazy move, you know what I mean? It's just.
Dude, look at this. Look at the SPC chart that I just posted on Twitter. So it's laughable. It's almost laughable how much you're keeping under control. Like the last 12 months of the TTM SPC versus the revenue, like the revenue just like goes up and SPC just like slowly drifts down. There is no SPC argument in this.
Yep.
Yeah.
100%.
Like
Solid
that is
chart.
laughable for a company that's accelerating revenue. Like it is. Software companies don't do that.
And for them, and for people to be like bitching at them about it, but then still like turn around and be like, all right, okay.
No,
Like,
yeah, there's always gonna be those analysts that say that all the time, like Nick was saying.
no, I know, but then they still
Yeah.
they're still like, okay,
Yeah,
we
they
can
still
cut
do
it
it.
down
Yeah.
more. And they were saying that they would have been buying back more shares too if it wasn't for the acquisition. So, which I'm completely fine with the acquisition, obviously, because it just gets them more data, full access to Europe. I think that's going to be huge in the long term, honestly. Like,
I just see margin expansion across the board there, besides free cash flow margin, maybe a little. Actually, no, that's still 14.2%.
Yeah, operating margin this quarter was almost 5%. Last quarter was 2.5%. So they almost doubled their operating margin quarter over quarter.
And you can't mess around with that metric.
no.
That's like straight from the business. Like you can't do any crazy accounting adjustments to get that up. I don't know if you guys are in seller. Yeah. Oh, go ahead.
No, someone commented stock is red now. Okay.
Yeah, it's down 2%.
Who cares?
It's down 2%, so now it's back to 11% up today.
It's so funny. Like when the stock is up, we're all like super excited. It's down 1%. It's like, I don't care, man. I don't care. And it's up like 10% up today. Oh, it's down 1%. Oh, it's not a big deal, man. I don't care.
It's just where you got to focus on the business. Like we're looking at the business right here. Like whatever the stock does, whatever the stock price does, it doesn't truly matter in the grand scheme of things, because like look at the business. Look how much they're crushing it right now. If you invest based off of that, the chart will go.
If it's a trade, it'll be like, okay, price action, the lines and everything, then that's when it matters, right? But I think it's more important when you think about the conviction, right? So if you're like really convicted about it, even if it was up 10%, it would be awesome, but like it's not really going to change anything. It's not going to sell.
Looking at the charts, it's so nice to just see that gap in income.
Yeah,
so nice to see.
Okay, so calls coming up. Ronnie, you got the link ready?
Yeah, I got it.
Okay, awesome, sweet.
Let me know when it goes live so we don't get schwacked.
Does somebody want to monitor that, Nate or Davis? One of you guys?
Well, how about you do it, Nick? How about that? I got it.
He just gave me I'm your boss.
Yeah, how about, hey, Nate, you want to go do this for me?
Yeah.
It's a team effort here. Come on.
No, I got it.
Guys, I just want to say my prediction was pretty dead on.
You were right, and your camera's broken.
My camera's broken?
No, it's fixed.
You're good now. There. Yeah, you're good.
This
yeah, but Ronnie, you were right. You were right, Ronnie. Flex all you want.
Dude, I love it, man. My wife doesn't tell me it ever, so.
I'm sorry.
Didn't tell you what.
That's shitty.
I'm just kidding. 25 cents versus 23 cents. They did 28 cents. And then less than 0.5, obviously. 394, they did 395. Guidance raise across the board. 10% move, which we got that before the overall.
I know. Yeah.
That's funny.
The markets even did anything. So
this is one of those things where
they doubled their operating profit quarter over quarter. That's crazy.
No, that's good. That's good to see. That's important when operating cash flow too.
It's now an all-time high for their operating profit.
Yeah.
Net income is still Q4 last year was more, but that's the political cycle.
Guys, they just crushed it, and then they're about to report for the Olympics, and then they got FIFA World Cup, and then they got midterm elections. Like insane.
A lot of
Insane, dude.
tailwinds coming up. The only
A lot of
headwind is
tailwinds.
whatever happens in that legal case, but it doesn't change the thesis long term.
Yep.
But frankly, if you can stomach the volatility we saw over the last month and a half, it's nothing, honestly.
Facts.
I mean, it was just at $14 like last week.
Yeah. Who was buying? I bought. Anybody else buy?
Nah.
I've been buying.
Poor.
You're poor.
Yeah, got no cash. I couldn't buy my 5 shares like David said.
I literally
I bought
recycled some of
15
my
last
leaps. I recycled some of my leaps into lower leaps. So like I'm like down to like $12.50, $15 and $17 strikes now for 2028.
The earnings call just started.
Did it? Okay.
All right.
Yep.
Sweet.
Come on, Nate. You're
It
supposed
still
to.
says music. I still hear music on my side.
Oh,
Oh,
Yeah, Davis.
I just got the notification. Oh, okay. Never mind.
He's trying to throw you under the bus.
Yeah, he's like, all right. Now it started. You're welcome for listening.
Listen-only mode. A question and answer session will follow the formal presentation. If anyone should require operator assistance during the call on your telephone keypad, please note this conference is being recorded. I will now turn the conference over to your host, Matt Faw. Thank you. You may begin.
Thank you, operator. Hello, everyone, and thank you for joining us for Zeta's fourth quarter 2025 conference call. Today's presentation and earnings release are available on Zeta's investor relations website at investors.zetaglobal.com, where you will also find links to our SEC filings, along with other information about Zeta. Joining me on the call today are David Steinberg, Zeta's co-founder, chairman, and chief executive officer, and Chris Greiner, Zeta's chief financial officer. Before we begin, I'd like to remind everyone that statements made on this call, as well as in the presentation and earnings release, contain forward-looking statements regarding our financial outlook, business plans and objectives, and other future events and developments, including statements about the market potential of our products, potential competition, revenues of our products, and our goals and strategies. These statements are subject to risks and uncertainties that may cause actual results to differ materially from those projected. These risks and uncertainties include those described in the company's earnings release and other filings with the SEC and speak only as of today's date. In addition, our discussions today will include references to certain supplemental non-GAAP financial measures, which should be considered in addition to and not as a substitute for our GAAP results. We use these non-GAAP measures in managing our business and believe they provide useful information for our investors. Reconciliations of the non-GAAP measures to the corresponding GAAP measures, where appropriate, can be found in the earnings presentation available on our website, as well as our earnings release and our other filings with the SEC. With that, I will now turn the call over to David.
Thank you, Matt. Good afternoon, everyone, and thank you for joining us today. We delivered our 18th consecutive beat and raise quarter, and I want to be clear about why this keeps happening. It is not a single product cycle or a favorable compare. It is the compounding effect of a system, proprietary data that improves with every customer interaction, intelligence that sharpens with every decision, and now an interface in Athena that lowers the barriers to enterprise-wide adoption. The flywheel is what drives durable, predictable, and profitable growth. Fourth quarter revenue was $395 million, up 28% year over year, ex acquisition and political candidate, an acceleration from the third quarter. Adjusted EBITDA was $95.1 million, up 35% year over year, and we had positive GAAP earnings. With these multi-year rates of revenue growth, we are taking market share. This is evidence Zeta is the AI disruptor in marketing. After providing initial 2026 outlook that was already ahead of consensus, we are once again raising the midpoint of our 2026 revenue guidance by $25 million to $1.755 billion, reflecting year-over-year growth of 35%. Our momentum is driven by AI shift from feature to infrastructure across the enterprise, and Zeta is built for this transformation. Our AI investments, which began 8 years ago, are yielding better and better results. Marketers are recognizing the strong return on investment delivered by Zeta and increasingly view us as a revenue center for their business, not a cost center. A recent total economic impact study by Forrester confirmed a 600% return on ad spend, which we believe is contributing to the wallet share gains from our competitors in an already quickly growing market segment. This is a reflection of what happens when proprietary data, intelligence, and activation work as one operating system, not 3 separate tools. Zeta is our client's marketing operating system, and we expect these returns to grow as our AI capabilities advance and Athena fully launches. The impact is already visible in our performance. Net revenue retention hit a record high of 120% in 2025, up from 114% in 2024. And RFP volume more than doubled year over year to a new record. Customers are spending more and new prospects are showing up faster, both signals of the same thing. The Zeta operating system is working and working at scale. Building on this momentum, at Zeta Live last October, we introduced Athena, our super intelligent agent built specifically for enterprise marketing. And since then, the pace of interest, engagement, and opportunity has continued to increase. At CES last month, Athena had a significant presence, and customer engagement was exceptional. Feedback was overwhelmingly positive, with customers consistently recognizing Athena represents a fundamentally new way of working. Early Athena users are reporting significant time savings in segmentation, production, analysis, and substantially better return on investment. This is the kind of workflow transformation that drives deeper platform adoption and greater utilization. Athena enhances the Zeta marketing platform that is an intelligent operating system for growth, one that can listen, reason, and act on behalf of marketers in real time. We are very encouraged by this early customer feedback and remain on track to make Athena generally available by the end of the first quarter. At CES, we also announced our partnership with OpenAI. We view large language models much like cloud infrastructure, foundational technologies that enable innovation with real differentiation coming from the tools, workflows, data, and operating systems built on top. Our partnership makes OpenAI's technology foundational to Athena, but powerful models are only part of the equation. AI is only as effective as the data that fuels it. As personalization moves to true one-to-one, identity and intent become critical. That's where Zeta's Supergraph comes in, a proprietary deterministic identity and relationship graph within our data cloud that unifies data across multiple sources. The Supergraph creates a moat that widens with every improvement in AI models across the market. Built over the past decade, Zeta's Supergraph operates at scale across more than 245 million US adults and 535 million globally, with more than 1 trillion signals, the vast majority of which are available only to Zeta. As AI demands higher quality, deterministic data to deliver real personalization, this asset becomes more valuable, not less. Our AI and data advantage also help to fuel One Zeta. One Zeta is no longer just a strategy. It is a repeatable sales model. In the fourth quarter, the number of scaled customers using more than one use case was up over 80% year over year. And the opportunity in front of us continues to expand. Today, we serve 51 of the Fortune 100, up from just 44 1 year ago, and over 120 of the Fortune 500. Collectively, these clients alone represent well over $100 billion in annual marketing spend, significantly expanding the long-term One Zeta opportunity. Athena further amplifies the strategy by removing the friction across the Zeta marketing platform, making it easier for customers to adopt, expand, and scale multiple use cases. And as I will discuss in a moment, the Marigold acquisition adds another important accelerant to One Zeta by expanding the data, use cases, and value we can deliver to customers. Taken together, the combination of our AI leadership, the continued maturation of One Zeta, and the momentum coming out of Zeta Live and CES, these are reinforcing our powerful growth flywheel. This momentum pushed our pipeline to record levels coming out of Zeta Live, and we have already closed $39 million of business directly attributable to the event, putting us well on our way to our goal of 100 million total. I will close with an update on Marigold. The integration is progressing well, and we continue to anticipate Marigold being accretive to free cash flow and adjusted EBITDA in year one. We are actively engaging with Marigold's enterprise clients through a One Zeta lens, identifying opportunities to add value, expand use cases, and deepen those relationships over time. We are also seeing strong interest from Zeta customers in adopting Marigold's loyalty product. As I reflect on what Zeta accomplished in 2025, I am so incredibly proud of this team. We exceeded our initial revenue guidance by 5% and our free cash flow guidance by 27%. We expanded existing partnerships and forged new ones, increasing our leadership in the marketing ecosystem. And we developed the most important product in our company's history with Athena. Together, we expect these achievements to extend Zeta's position as the defining AI disruptor in the marketing ecosystem. As always, I would sincerely like to thank our customers, our partners, Team Zeta, and all of our shareholders for the ongoing support of our vision. Now let me turn it over to Chris to discuss our results in greater detail. Chris?
Thank you, David, and good afternoon, everyone. Our results once again demonstrate the durability, predictability, and profitability of Zeta's growth, which we expect to continue as seen in our increased 2026 guidance. Revenue growth, excluding Live Intent, Marigold, and Political Candidate, was 28.2% in the fourth quarter, up from 28.0% in Q3, and up from 27.4% in Q2 and 25.9% in Q1. And 2025 was the sixth straight year in which revenue grew greater than 20%, underscoring the durability of our growth and the sustained market share gains we are taking. Results once again exceeded guidance, and just 2 months into the year, we are raising our 2026 outlook, reflecting the visibility and predictability of our business. For the full year 2025, we expanded adjusted EBITDA margins by over 200 basis points, achieved the highest free cash flow margin in our history, generated $199 million in net cash provided by operating activities, and turned GAAP net income positive in Q4, demonstrating the profitability of our growth. Now, I'll discuss our results in more detail. In Q4, we delivered revenue of $395 million, exceeding the midpoint of guidance by $14 million, or 4 percentage points higher than our forecast, solidly within the 2 to 5 points of cushion we typically leave ourselves. The full year's revenue was $1,305 million, up 30% year over year, or 27% when excluding Live Intent, Marigold, and prior year political candidate revenue. This exceeded the midpoint of our initial 2025 guidance by $65 million, or 5%. Our platform is relied upon across virtually all industry verticals. For the first time as a public company, 9 out of our top 10 verticals in 2025 grew over 20% year to year, quite a testament to our broad-based leadership. Some of our fastest growing verticals in 2025 were travel and hospitality, up 105%, advertising and marketing, up 70%, automotive, up 60%, and consumer and retail, up 46%. And worth noting, healthcare, an area of new investment, grew over 20% and is showing strong momentum. Total scaled customer count grew to 602, up 14% year over year, and an addition of 30 customers sequentially. We ended the quarter with 184 super scaled customers, up 24% year over year, well above our target of 4 to 8%. Super scaled customer additions were broad-based across industry verticals, including travel and hospitality, services, technology and media, and consumer and retail, and were driven by continued momentum of our One Zeta initiative. Scaled customer quarterly ARPU of $625,000 increased 8% year over year and over 15% when normalizing for political candidate revenue in the year-ago period. Super scaled customer quarterly ARPU of $1.8 million was up 5% year over year and also up mid-teens when normalizing for political candidate revenue last year. Both growth rates are in line with our ARPU target of 12% to 16%. Now, I want to double-click on the importance of super scaled customers for a moment. Since our IPO, Zeta's growth has been fueled by super scaled customers whose spend has grown to represent a larger and larger portion of total revenue. Back in 2020, customers spending at least $1 million annually represented approximately 70% of total revenue. By 2025, that figure is now approaching 90%. And over that same period, more than 90% of total revenue growth has come from the at least 1 million super scaled customer cohort. This dynamic is leading to a natural evolution in reporting of KPIs. In 2026, we will exclusively focus quarterly reporting on super scaled customer count and ARPU. In many ways, today's 1 million plus customer is 2020's $100,000 customer. In fact, one could imagine a new cohort of 10 million plus customers emerging down the road. The growth and prominence of super scaled customers is by design. It reflects how we manage the business internally, shows the efficacy of our land, expand, extend, hunter-farmer sales motion, along with the power of One Zeta working in unison. Our customer-centric flywheel propels the progression from pilot to broad-based platform adoption, powering our very strong net revenue retention rates. First, we allow customers to start small with pilots and proof of concepts ranging from $50,000 to $150,000, which can begin with Zeta data usage, a CDP, or channel activation. Second, we provide these pilot customers with transparency into measurement and ROI. Third, our software and AI learn from past programs and form recommendations to continuously improve return on ad spend, which all leads to creating new audiences, adding more channels, and branching into new use cases, each incremental to ARPU. This is best brought to life by slide 10 in our earnings supplemental. Customers on the platform in their first year quickly scaled to 709,000 in 2025, representing 111 scaled customers or 6% of total revenue. These customers often start with one channel and one use case. Customers on the platform in years 1 to 3 spent an average of $1.1 million in 2025, representing 217 scaled customers, or 19% of revenue. These customers begin to scale beyond one channel, but remain generally on one use case. Customers in years 3 through 5 spent an average of $2.1 million in 2025, representing 65 scaled customers, or 11% of revenue. Customers in this cohort are moving into omni-channel experiences. And lastly, customers on the platform 5 or more years, the earliest adopters of the ZMP, spent an average of $3.9 million in 2025, representing 209 customers, or 64% of total revenue. This cohort makes up the largest percentage of revenue and the fastest growing ARPU, up 39% year to year. Shifting to revenue mix, direct revenue in the fourth quarter was 74%, in line with the year-ago quarter and our target of 70 to 75%. Our GAAP cost of revenue in the quarter was 40.4%, a 50 basis point increase year over year and 100 basis points sequentially. The increase in cost of revenue was driven by strong sequential and year-over-year growth in social and connected TV. In the fourth quarter, we generated $95.1 million of adjusted EBITDA at a margin of 24.1%, 174 basis points higher year over year, and $4 million better than the midpoint of our guidance. This marks the 20th straight quarter of expanding adjusted EBITDA margins year over year. For 2025, adjusted EBITDA was $279 million, representing a margin of 21.4% and 44% year-over-year increase. We also generated positive GAAP net income. For the fourth quarter, our GAAP net income was $6.5 million, an improvement from a net loss of $3.6 million last quarter. Fourth quarter net cash provided by operating activities was $64.1 million, up 47% year over year, with free cash flow of $55.8 million, up 76% year over year, and representing a margin of 14%. This represents a free cash flow conversion of 59%, a significant improvement from 45% in the fourth quarter of 2024. This also includes a roughly 9-point working capital headwind driven by longer agency payment cycles common to their industry. The improvement in both adjusted EBITDA margin and free cash flow margin conversion in the fourth quarter exhibits the strong operating leverage of our model, which we believe puts us firmly on track to achieve our Investor Day target of a 30% plus adjusted EBITDA margin and greater than 70% free cash flow conversion in 2030. For 2025, our free cash flow was $165 million, a margin of 12.6% and up 78% year over year. During the fourth quarter, we repurchased 1.9 million shares for $35 million, and for the full year 2025, we repurchased 7.9 million shares for $120 million. Since January 1st, 2026, and up until mid-February, we have repurchased an additional 1.5 million shares for $25 million and have roughly $139 million remaining on our share repurchase authorization. We expect to remain active buyers of our stock, especially at these levels. We continue to make significant progress in reducing dilution and stock-based compensation expense, just as we said we would. We ended 2025 at the low end of our guidance range, with total net dilution of 4.3% or 2.2% excluding Marigold. Additionally, we improved the ratio of stock-based compensation to revenue from 19% in 2024 to 14% in 2025. And we remain on track to achieve our normal course 3% to 4% net dilution target in 2026. Now on to guidance. We are raising first quarter and full year revenue, adjusted EBITDA, and free cash flow guidance. Details can be found starting on slide 19 in our earnings supplemental. But before discussing the numbers, I'd like to highlight a few key aspects of our business model. First, our revenue is tied to the volume of decisions made, not seats, whether those decisions are made by a human or an agent. This foundation and flexibility to adapt to the rapid pace of AI innovation provides durability to Zeta's growth. Second, strong pipeline visibility and sales productivity support our confidence in the year ahead, and we continue to guide with planned conservatism of 2% to 5%. And lastly, as we integrate Marigold, we expect to realize further operating leverage. For the full year 2026, we are increasing the midpoint of revenue guidance by $25 million to $1,755 million, representing a 35% growth rate or 21% year over year when excluding Marigold and political candidate revenue. None of our guidance raise is related to political candidate revenue, which we continue to assume will be $15 million in 2026, with $7 million in the third quarter and $8 million in the fourth quarter. Additionally, we continue to take a conservative view of Marigold, contributing at least $190 million in 2026 revenue. And lastly, our revenue guidance includes minimal contribution from Athena-driven revenue, with its broad-based adoption representing incremental consumption revenue upside. For the first quarter, we now expect revenue of $370 million at the midpoint, $8 million higher than our previous guidance, and representing year-over-year growth of 40% or 22% when excluding political candidate and Marigold revenue. The linearity of revenue as it spans each quarter of the year aligns with historical averages, so there is no front or back-end loading of revenues or growth rates. For adjusted EBITDA, we are increasing the midpoint of our 2026 guidance to $391 million, up $6 million from our prior guidance and representing year-over-year increase of 40% at a margin of 22.3% and an improvement of 92 basis points over 2025. For the first quarter of 2026, we now expect adjusted EBITDA of $61.5 million at the midpoint, up from our previous expectation of $60 million and representing growth of 32% at a margin of 16.6%. We are also increasing the midpoint of our 2026 free cash flow guidance to $231 million, up $7 million from our previous guidance and representing year-over-year growth of 40% at a conversion of 59% of adjusted EBITDA, which likely has upside. Additionally, we believe our fourth quarter positive net income on a GAAP basis represents an inflection point, and we expect to generate positive GAAP net income for the full year of 2026, a significant milestone for the company. Today, we would also like to provide updated Zeta 2028 targets to account for the acquisition of Marigold. We're raising our revenue target from $2.1 billion to $2.3 billion, representing a CAGR of 23%. We are also increasing adjusted EBITDA target to $573 million, which implies a margin of 25%, and a free cash flow target of $371 million, which implies an adjusted EBITDA conversion of 65%. I'll conclude with this. In environments like today, it is more important than ever to control the controllable. For us, this boils down to hiring and retaining the industry's best talent. This is how you continue to lead. Delivering customer outcomes with unmatched industry ROIs. This is how you garner loyalty, generate best-in-class retention rates, and win market share. And doing what we say we're going to do for investors. This is how you earn trust and show durable, predictable, and profitable growth. Now let me hand the call back over to the operator for David and me to take your questions. Operator?
Thank you. We will now be conducting a question and answer session. If you would like to ask a question, please press star one on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star two if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. And our first question will come from Terry Tillman with Truist Securities.
Yeah, hey team, thanks for taking my questions. I had a question and a follow-up. I must ask about Athena. And again, I know that it's not generally available yet, but when you all put out a press release a while back, it did actually have a customer already quoted in there, which I thought was interesting. But you talked about a couple of agents at that point, Insights and Advisor. Can you remind us, is there going to be kind of a whole slew of agents that you will release, or are these going to be the two primary ones and there is a monetization structure around that? And the last part of this Athena long-winded question is, you know, with the business that you've signed to that year to date, has it had an influence in some of these deals getting across the line, even if you're not monetizing? And then I had a follow-up. Thank you.
So thank you, Terry. Let me start by saying that those two agents are first because they will drive probably the greatest benefit to our customers. So when you think about Athena and you think about large language models and how we are using them to win in the marketplace, today, the Zeta marketing platform is like a 747. Most of our clients know how to fly a Cessna. The beauty of Athena is the ability to fly the entire 747 just by narrating and speaking to Athena, who can automatically do it. So to answer your question, these will be the first two agents. We will have it generally available by the end of this quarter. We have a number of clients as early users today. The initial feedback has been it is game-changing from a workflow management perspective, and it is driving substantially higher return on investment than the existing 600% return on ad spend that the platform is generating. As we roll out additional agent function built into Athena, she'll be one agent, but with different feature sets, if you know what I'm saying. It won't be different agents sitting under her. Everything will be driven by Athena. We're going to continue to drive out functionality based on things that we believe will drive the highest utilization rates, the highest move to One Zeta. And I think you'll see that really start very quickly out of the gate soon.
That's great to hear. And I guess, Chris, maybe a follow-up. You framed it well in terms of maintaining that 2 to 5 point cushion. But I think for the year, sometimes you've talked about maybe your top 5 kind of spending verticals and maybe the assumptions you're assuming for the rest of the year off of your top 5 verticals. Can you maybe share kind of another way of looking at conservatism, looking at some of your biggest verticals and what you're assuming the rest of the year, like consumer retail and travel and hospitality? Thank you.
Yeah, Terry, I mean, what we found was that those verticals that have been, are closest in proximity to, consumer discretionary, as you saw through the prepared remarks, were and have continued to be throughout the year our top performing verticals. This was a first for us in our history to have 9 out of our top 10. And that's, by the way, on a trailing 12-month basis. That's not cherry picking a particular quarter, grow over 20%. Our guidance does not assume that. Our guidance is probably closer to half, which is even below what we've been historically. The other way I'd encourage you to think about the conservatism in our guide is we've reiterated that continued 2 to 5 points of cushion. We have also kept what we believe is a conservative view of political candidate revenue at $15 million in the guide. So of the raise that we put through, none of it was a change in our assumption of that $15 million. So that should be conservative. We continue to be conservative around Marigold. And to the extent, as David talked about, we get really strong continued adoption from Athena, and that adoption has proven to generate increased ARPUs and usage. We're assuming minimal contribution right now in the guide. So that should also be incremental upside. So I feel like this is a very nicely de-risked outlook to start the year.
Thanks a bunch.
We'll go next to Zach Cummins with B. Riley Securities.
Yep. Hi, good afternoon. Thanks for taking my questions and congrats on the strong end of the year. David, I just wanted to ask about the deals that you've already closed coming out of Zeta Live. I think almost nearly 40 million in business. I mean, any particular trends that you can highlight, whether it's customers in a particular vertical or a particular solution set that's driving the early momentum? And then just curious on how you're thinking about that continued progression through those pipeline opportunities in the coming quarters.
The one consistent, Zach, is they all really love the chain smokers. No, in all seriousness, it was across multiple verticals. We saw a very big win in telecom, which I think will continue to get bigger. But I would tell you that the 39 million is sort of a just getting started number, and it was really amplified by the Consumer Electronics Show. I've been running this company now for just over 18 years, and I have never experienced the type of experience we had at the Consumer Electronics Show this year. It was, everybody knew who we were. the move from, Zeta who to Y Zeta to, Zeta now has really begun to take shape. And, you look at a 600% return on investment, you're really seeing us as the AI disruptor in the marketing space. As I say, we are the disruptor, not the disruptee in this space. And I think, that first 40 million against what I think will be over 100 million. Now, of course, I've got to make sure I get Chris comfortable with that as we look at what we're going to spend on this year's Zeta Live, which might be a bit more than last year's. We have some really cool stuff planned. But the company is really re-architecting to make the vast majority of our annual time, energy, and capital investment as it relates to events, not all, but the vast majority, around the Consumer Electronics Show, the Possible Conference, Cannes Lion, and Zeta Live. And, I think that if you look at our record pipeline, in addition to the raise that is at this point a bit conservative, I think you're going to see us continue to win in the marketplace.
Zach, what's interesting about that Zeta Live pipeline, with the 40 million that's already been closed, there's still another 200 opportunities, distinct opportunities tied just to Zeta Live, valued at over 130 million in to-go pipeline to get that extra 60 from. So as David said, that's looking like a very achievable number.
Understood. And my one follow-up, Chris, is just around the gross margin number that we saw in Q4. Any one-time impacts here in the fourth quarter? And now with Marigold in place, how should we think about the right gross margin expectation through 2026?
Yeah, look, I even zoom out a little bit more, Zach. When you look at our 2028 model, each year we should be getting between 100 and 300 basis points of gross margin improvement. Marigold is a tailwind to that. When you look at the fourth quarter's gross margin profile, you had our integrated platform revenue growing 25%, as well as our direct revenue mix growing 25% year over year. We had very strong channel quarters in social and very strong channel quarter in connected TV. Both of those below the overall corporate average, but good indications for multi-channel, omni-channel usage.
Understood. Well, thanks for taking my questions, and best of luck with the rest of the quarter.
Thanks, Zach.
Our next question comes from Jason Kreyer with Craig-Hallum Capital Group.
Great. Thank you, guys, and congrats on 18. Excited to hear about 19 next quarter. Wanted to just ask the evolution on One Zeta. I think you're integrating some of that sales functionality into Athena. So what does that mean for customers, or what does that mean for the cross-sell experience when you combine One Zeta with Athena?
Let me start by saying thank you, Jason. Appreciate it. And our goal, as always, when we start a year, is to finish the year, 4 additional beat and raise quarters by the end of the year. So, we're at 18. Our hope is to be sitting here with you guys next year talking about 22. The number of enterprise clients that used more than one use case in the fourth quarter of 2025 was up 80%. That's 80%. And that is a massive testament to One Zeta. You're seeing the team headed by Ed C. and, of course, Steve Gerber that are really, really getting traction here. Now, that's before the next level of uplift, which will come from Athena. So I think that as you see customers moving from one use case to multiple use cases around the One Zeta strategy, to remind you, we see an average of a 200 to 300% revenue uplift from those clients from the past. Now, I don't know if every client is going to do that going forward, but we do continue to see a meaningfully higher spend from customers who are moving from one use case to two. I think also one of the things I was most proud of last year, and this was not a cherry-picked quarter, for 2025, our net retention rate was 120%. I was always happy at the 110 to 115. So when you look at 120, that means that One Zeta is really working and our clients are scaling very, very quickly. Chris?
Yeah, David, you said it perfectly. We had, if you look at the total percentage of scaled customers, Jason, that are now on more than one use case, we're almost at 25% compared to, call it 13% a year ago. So just really exciting progress made this year.
Awesome. Appreciate that. One follow-up for me on Marigold. So now that you got that closed, curious what the international expansion plan looks like and how you go after international from kind of a pull versus push mentality. Thanks.
Yeah, I mean, what we're seeing now, Jason, is international is really happening very naturally as our clients are mostly multinational enterprises. The adding of the Marigold international assets should accelerate that. But at the same time, I want to point out the vast majority of our revenue is in the United States. This is the largest advertising market in the world by dollars, and we are taking meaningful market share. Last year, the average growth rate of the marketing ecosystem was about 10%. We grew 30%. So, as we are disrupting the marketplace, we're taking greater market share in the United States, and we're seeing a natural progression and a very nice growth rate internationally, which is a reverse from prior years where we had struggled there. So I'm hopeful for international, but I would tell you that we certainly are not projecting it to be a massive component of this business for many years to come.
Got it. Thank you.
Thank you, Jason.
We'll go next. Yeah, we'll go next to Arun Bhatia with William Blair.
Perfect. Thank you so much, and congrats on a strong Q4 here. Maybe I'll continue on a kind of Athena line of questioning. David, you're clearly having success already with One Zeta, right? The rise in multi-use case customers is increasing. I'm curious, just as you think about 26, is it possible that Athena can have a meaningful impact this year? Does it take customers some time to kind of use it and ramp up on additional use cases? Like, how are you thinking about the timing of when the sort of indirect revenue impact of Athena might come through?
I think it could be 26. We're not counting on it, and we have not put that into our projections. And certainly you don't know. But what I can tell you is if you look at the early access clients, they are spending materially more with Athena than they were without her. They are telling us that they're seeing a game-changing workflow environment, which is great. And they are seeing a substantially higher return on investment, which at the end of the day, when you think of our biggest moats as a company, data is number one. Number two is our ability to drive superior return on investment, call it right now 600% return on ad spend. And then, of course, the ability to work with very large enterprises through their data security group, their data privacy groups, their legal groups, their procurement groups, so on and so forth. I think Athena helps us continue to drive greater return on investment, both from a workflow management perspective and from a return on ad spend, which will cause our clients to drive even more of their existing marketing dollars to us.
All right. Perfect. That's helpful. Thank you. And then, Chris, one for you. In the back half of 25, you kind of ended the year on a strong note in terms of GAAP profitability, GAAP op income, and in Q4 you hit kind of net income positive as well. How are you thinking about how that shapes up in 2026, and what does that sort of imply for stock comp outlook next year and beyond?
Yeah, thanks, Arjun. It was an area that we had just very constructive investor feedback that it was important for the company to make strides towards that goal. Turning the corner this year in 2025 towards positive, and then seeing ourselves kind of as this being now an inflection point. I think of it from a GAAP EPS perspective, call it 2 to 4 cents in that range. There's upside to that, and obviously depends on a number of factors. But when you think about the ingredients that went into that inflection point and turning positive, it was progress on dilution, it was progress on stock-based compensation, and then more and more yield off of adjusted EBITDA dropping to free cash flow. So we're really excited about that being a turning point, and it's onward and upward from here.
And we expect to be net income positive this calendar year forward.
All right. Perfect. Thank you guys again. Appreciate it.
Our next question comes from DJ Hines with Canaccord Genuity.
Hey, thank you guys. Congrats on the excellent quarter. David, I want to ask about the OpenAI partnership. I think, you were quoted saying this is going to be the most instrumental partnership we've ever embarked upon. As you look out over multiple years, and you see the potential for how that relationship may evolve over time, what excites you the most about that opportunity?
Well, first of all, they're an incredible. Hold on, I'm sorry, I'm getting feedback. To move back. Can you hear me, DJ?
I can hear you. Yep.
Great. So what I would say is, first of all, OpenAI is an unbelievable organization. And when we think about the large language models, we think about them much like we would think about AWS or Snowflake, where they are all at some point going to be a part of our stack. In fact, we work with most all of them, if not all already. The partnership with OpenAI is different because it's foundational to Athena. We're also working with them on other components of their business where we are actively talking about doing things to help them with their business while we are talking about them doing more things to help us with our business. So I was really referring to sort of the organizational partnership when I was talking about how I think this will be one of the most important partnerships we've ever made. And as we're looking at Athena, so once again, this whole narrative that large language models are going to disintermediate enterprise software, in our opinion, is silly. We think that large language models are going to be a component of what we do. And of course, we will pay them for their products and services. At the same time, they'll drive efficiency and accelerated revenue growth into our business, which will more than make up for that. And when you think about what we're doing here, the whole goal is to get our clients to be able to more seamlessly use our platform, drive higher return on investment, and make easier workflows for them around flying a 747, which is our platform, versus the Cessna they currently know how to fly. OpenAI, being foundational to Athena, is helping us do that, and helping us do that in a very impactful and very meaningful way. Does that make sense, DJ?
It does make sense. Yep. Maybe a follow-up on the data side. I'm curious, does the ability for Discuss to collect data or intent signals change in any way with the emergence of AI answer engines? I'm just feeling like people are landing less on owned media and now just reading more summaries. Have you seen any change in the volume of comments or authenticated site visits, and does that impact your ability to collect data at all?
So it's a great question. The answer is no. We have not seen any of that. In fact, because right now the publishers, a lot of them have a challenge, right? If you look at Google by way of example, it used to be that 90+% of all queries were directed off to a publisher, a brand, or an e-commerce platform. Today, according to them, greater than 60% of all queries are being answered on their platform. That's creating a massive tailwind for Zeta. First, it is massively driving up the cost per click, which is driving advertisers to look for new methodologies for cost-efficient management of their marketing. Second, we're seeing that publishers are more anxious for traffic than ever before. And if you look at our email platform around live intent and other things we're doing, we are one of the biggest drivers of traffic. And then you put Sail-Through in, which was one of the assets we acquired through Marigold, which is one of the larger ESPs for publishers. Our publisher cloud is driving massive volume of traffic back to publishers at a time when they need it, and we're helping to monetize them as a part of it. So even though they're seeing less traffic today, DJ, from Google directly, we're actually helping them to drive incremental traffic. I'll also remind you that Discuss is one of call it 20 different platforms we now control that are generating real-time signals on a day-by-day, moment-by-moment basis. But to date, we have not seen any fall off there.
Yeah. Okay. Very interesting and very helpful. Thank you, guys.
Our next question comes from Richard Baldry with Roth Capital Partners.
Thanks. It looks like quota carriers are up about 10% sequentially. I assume some of that has to do with the Marigold acquisition. Can you talk about, any cross-training efforts that are needed and how we should think about, more or additions to the quota carriers throughout the year ahead?
Yeah, Rich, we added, call it 15-ish in that range from Marigold in terms of quota carriers sequentially. So you're right. That was a driver there. I'll let David take the next one.
Yeah, what we're doing, Rich, is we're sort of teaming their salespeople up with ours. So rather than taking all of the time to train them on everything we're doing, for their clients, we've sort of segmented it to the top 30, which are, I'm pretty sure, all Fortune 500 companies. But the reality is that we're going in and we're seeing really interesting cross-sell opportunities already because of that.
Got it. And last for maybe sort of, we'll be gentle and call it an unusual environment for software valuations. So I'm sort of curious your own internal preferences to allocate capital between either M&A, because you've done some meaningful strategic M&A, versus buybacks over sort of the near term, intermediate term. Thanks.
Yep. So let me start by saying we are buying back stock very rapidly. I think we have 130 million left, give or take, on our existing buyback. When we get through that one, we will most likely announce the next one. Every time we've announced a buyback, it has been 100% greater than the prior buyback. So I think right now, the single best use of our capital is to buy back our shares. Now, that being said, we've been around for 18 years. I just did a CNBC interview earlier, and it's sort of, we figured out we've been around for 18 years. We've done 18 acquisitions, and we've beat and raised 18 quarters in a row. So this is sort of the 18 cubed results as it relates to that. It is highly probable we'll do a 19th acquisition. And this is obviously a good environment to buy what I think are high quality assets at a lower price than you would have had to pay. We have a very, very solid balance sheet. We have a lot of cash. We are generating meaningful free cash flow with almost a 60% conversion rate of cash to EBITDA. And I think that'll continue to go up as we've talked about. And we have de minimis debt. Our debt ratio is below, is zero. I don't know if it's below zero, but it is zero at this point. So I think we have the opportunity to do something, although there's nothing on the radar right now. Right now, we're operating our business. We've obviously given, as reported, guidance to a 40% growth rate in the first quarter, a 35% growth rate for the year, and feeling like we're in a very good place.
Yeah, we've really stepped up the repurchase program in 25, and as David said, especially at these levels, I would expect it to sustain. As a percentage of free cash flow, we did 45% repurchase to free cash flow ratio in 2024. We did 73% in 2025. So our model's always been, at least 50% of the free cash we generate. But as David said, we're going to be aggressive in this environment.
And Rich, I don't know if you've been able to dig out of the snow, but just to show the nimbleness of our organization, I woke up in Los Angeles yesterday with a 50% probability of going to New York to do our earnings, a 50% probability of the team coming to LA to do earnings, and we are now all in Miami doing our earnings because it was the only place we could all get to. So we tend to be on the more nimble side as it relates to this stuff.
Got it. Maybe one last one for me. The net retention number of 120 was a pretty strong number. It piece it a little bit apart. Was it more driven by volume usage or more by the number of use cases sort of climbing? And I'm a little struck that it's that strong ahead of Athena being GA, because it seems like that lowers the friction to usage. So, is there anything we should think about on that number and its sort of one-time orientedness or sustainability or extensibility? Thanks.
No. I mean, if you look at, you can go into each of the Qs and get a pretty good indication throughout the year of the net revenue retention rate. You can get pretty close to it, not exact, because that's an annual metric, but you'll see that it was really kind of we're going in with a running start into 2026. It was a very strong end of the year. A few dynamics to think about. First, we benefited from a lot of new customers that were added late in 2024 that very nicely scaled throughout 2025. What's also, I think, evident in the results is not just the addition of use cases and channels, Rich, but growth within brands in the agency ecosystem. If you look at brands within the holdcos on a year-over-year basis, they're up 80%. That's a big change that drives growth within just, call it one scaled customer, but can have, some pretty dramatic ARPU expansion outcomes.
Yeah, and I don't see it as an anomaly, Rich. I mean, we're not going to guide to that, but the reality is that what we're seeing is the, bringing EDC in last year and building the systems around One Zeta has been game changing for moving from one use case to multiple. And as we've mentioned before, when a client moves from one use case to two use cases, their spend goes up materially, as evidenced by the 80% growth in multi-use case customers for Q4 over Q4 the prior year. So I think that Athena will help us with that number, and I think we're going to continue to run hot there.
Congrats on the great results.
Thank you very much, Rich.
Moving next to Elizabeth Porter with Morgan Stanley.
Awesome. Thanks. This is Katie Keyser on for Elizabeth. I just had a quick one, hoping for an update on the political and advocacy side of the business, really just in the context of what you've seen during previous elections. You guys clearly expanded the size and scale of the platform since prior midterm election cycles. So wondering what you're seeing early in 26 as it relates to advocacy. And then maybe just for Chris, if you could comment on how that spend is expected to phase through your guidance, kind of what scenario would cause that to prove conservative. Any thoughts there would be great. Thanks so much.
Sure thing, Katie, and give our best to Elizabeth. From 2020 to 2022, the contribution in political candidate revenue halved. It was called 20 million in 2020, 15 million in 2020, and it was 7.5 million in 2022. In 2024, total political candidate revenue is right around 40. So starting this year's guide at 15 is, probably conservative. What we've said in terms of the cadence of that spend that we expect to realize is, call it 7 million in the third quarter and 8 million in the fourth quarter. Advocacy is an always-on industry for us now. It's obviously bigger in political candidate cycles, but we've actually made some really exciting new hires in 2025 into that area in advance of building momentum for 2026. So I expect that to continue to be an always-on industry for us. It'll benefit in the candidate year, but it's not driving any outsized contribution in our current guide right now, though.
Yeah, and it could be upside, Kate.
Awesome. Thank you.
Thank you.
Moving next to Matt Swanson with RBC.
Great, thank you. A really impressive number when you're talking about the 600% ROI from the Forrester study. Can you just talk a little bit about kind of the macro resiliency that gives your business, just as we're dealing with all the headlines around tariffs and everything else?
So thank you, Matt. We actually think it doesn't just insulate us from the macro environment. We think it accelerates in this macro environment. What we see is, as clients are dealing with different sort of variables in their businesses, they want to maximize their return on investment in every component of their business, with marketing being one of their largest expenses as organizations. So, I think it's helped us over the last year, and I think it'll help us over the next few years.
And then if I could just double click on one aspect of Marigold. I know loyalty was something that we talked a lot about when the acquisition was first announced. I think in the prepared remarks, you mentioned that you're seeing some early interest from customers. I was wondering if you could just expand on that a bit.
Yeah. So first of all, we're very excited to take their customers and move them into the One Zeta solution. To remind you, when we bought Marigold, they were effectively 100% retention business. They didn't have anything around new customer acquisition, and their monetization was very limited. So we're very excited to take their customers and move them into multiple use cases, particularly around customer acquisition. We're also seeing real interest from a large number of our existing clients to use our new loyalty solution, and we're starting to see meaningful traction there. We're also doing something really interesting, which is in sort of the next release, not the first release, but we'll probably be doing an Athena release a quarter over the next few years, with it being generally available as we expect it to be this quarter. We're very on track for that. But we're going to be integrating Athena into the loyalty program as well. So I'm very excited about that and its ability to seamlessly integrate then into all of our existing 603 scaled customers.
Thank you.
And we'll go next to Scott Berg with Needham & Company.
Hi, this is Lucas Metcalf on for Scott Berg. Thanks for taking our question. Just in terms of 2026 marketing budgets, what are you guys hearing from customers about overall kind of spend growth and how AI is shaping kind of their allocation decisions? And then I guess specifically, are you seeing AI driving incremental budget expansion, more platform consolidation, or are you just kind of seeing a reallocation within existing spend? Thanks.
Well, it's a lot to answer in one fell swoop. What I would start with is, yes, we're seeing platform consolidation. We're starting to see that our entire strategy around disintermediating point solutions into one platform is really taking hold. And Lucas, I think our 120% net retention rate last year really evidences that. What you're also seeing is marketing budgets from our vantage point in the United States in their entirety going up into 2026. We think we'll see marketing budgets up and to the right, and we think we will continue to take a multiple of that growth in our growth rate as a company.
Awesome. Thanks, David. Appreciate it. Of
course.
Moving on to Jackson Ader with KeyBanc Capital Markets.
Hey guys, thanks for taking the question. This is Jack Nichols on for Jackson Ader. With RFP volumes more than doubling, who are you mainly seeing in deals from a competitive standpoint? And can you talk about Zeta's right to win there? And kind of said another way, who are you taking budget dollars from? And then I've got a follow-up.
Yeah, I mean, we continue to see a whole host of point solutions depending on how the RFP is drafted. And we move the narrative from individual point solutions to our platform solution, which is how we're winning. What I would tell you is we continue to see Salesforce, Adobe, to a less extent, Oracle, and a few other smaller players in the CRM RFPs. And then in the acquisition RFPs, we're seeing companies like the Trade Desk who continue to be challenged as we continue to take market share from them and others continue to take market share from them. I'm sure they'll have their viewpoint on that at some point. But what I would tell you is that we see the different point solutions in these RFPs. And what I would tell you is we continue to win greater than 50% of the engagements and RFPs we get invited to participate in. And what you're seeing in the numbers, which obviously are growing faster than we even expected, and we expected to grow fast, is we're seeing far more RFPs than we've ever seen before. So we're seeing more RFPs, and we're still winning greater than half. So you're starting to see that ripple into the numbers. I'm pretty sure this will be our third consecutive 30% growth year based on our existing projections. You're talking about 3 years in a row of 30+% growth and a 4 or 5 year 30% compounded growth rate. You're seeing that come in through the growth of the RFPs.
That's helpful to understand. And then maybe as a follow-up, how specifically are agencies thinking about their AI marketing strategies, maybe splitting the difference between Athena and then third-party LLMs? How are the marketing agencies kind of going about the testing and then the use case testing and deployments there?
The LLMs have no capabilities around activating marketing. I mean, to be very clear, today, the only thing the LLMs can do, it can help, more efficiently code, which, by the way, our entire engineering staff is using every tool available around efficiency of coding, whether it's Anthropic or it's OpenAI or other products in Gilt. And we continue to use all of them, which is one of the ways we're staying ahead of our competitors as it relates to our engineering and innovation capabilities. So we're not seeing any of the agencies at this point looking to move activation to an LLM because they have no activation capabilities. Even the LLMs that are rolling out their own marketing are not doing it themselves. So I think what you're going to see is the agencies continue to consolidate platforms. As Chris said, I think we grew our brands with the agencies we work with by 80% last year over the year before. That's not an accident, right? They're not looking to split that up with LLMs. Now, I've had conversations with the heads of all the agency holdcos as of late, and everybody is looking to figure out how do they use large language models to be more efficient inside their businesses, just like we're doing. And I think they're going to continue to look to do that. But from an activation perspective, our data, which is one of the biggest moats in our business, which is never fed into large language models, it stays behind our cloud, is invaluable to our enterprise and agency clients as it relates to our models being able to train on our data exclusively and the ability to better target and create better return on investment. So I'm not seeing any of that being split up at this point.
Thank you.
We'll go next to Koji Ikeda with Bank of America.
Hi, this is George McGrean on for Koji Ikeda. Appreciate you guys taking our questions today. I wanted to ask on the strength you're seeing in terms of Fortune 100 and Fortune 500, these large enterprises and the new customers coming online from those areas. What are conversations like with these large enterprise customers that presumably have a lot more room to grow with the platform over time? What are they excited about when it comes to the Zeta platform? Thank you.
So thank you, George. Great question. First of all, as we announced, we are now working with 51% of the Fortune 100 and 24% of the Fortune 500. But you're right. We have a very small wallet share there with a massive headroom to grow. Everybody that we're talking to in the Fortune 500 is focused on return on investment. How do they get the highest possible return on their marketing spend to drive efficiency into their business? Because for most Fortune 500 customers, especially the ones that are consumer facing, I would say that their second or third largest global expense is marketing. And as they think about that, they're thinking about how do they invest that in a way that they can get the highest possible return. I would tell you, even 5 years ago, Fortune 500 companies were focused not on return on spend, they were focused on the percentage of their revenue that sales and marketing represented. So if they were spending if they were generating $100 in revenue, how do they spend $20 or $22 in marketing? As it relates to today, it's how do we spend $1 and return 500, 700, 1,000% against that dollar? And the attribution capabilities compiled with our proprietary data, compiled with our activation capabilities, are creating a true return on investment analysis that has not been available to Fortune 500 companies in the past.
And we'll go on to our next question, Callie Valenti with Goldman Sachs.
Hey, team. Thank you for taking my question. Just one for me. Wanted to ask, I know part of your strategy over time has been acquiring assets to add to your data cloud. I'm curious, as consumers interact more with LLMs and that ecosystem continues to mature, how do you think about the potential to capture data from these new channels through M&A or other means?
It's a great question. And yes, we, Callie, have always looked at how do we build on our data cloud. What I would tell you is, you hate to plant a flag and say you're done, but I would tell you that today our data cloud is really the best data cloud in the world. We've got better access to information than at any point ever. We're ingesting trillions of signals. And by the way, we've rolled out our own generative optimization platform, the GEO platform, where we are helping our clients to better get their information and their businesses fed into the large language models. It's something that allows us to learn a tremendous amount about how the LLMs are acting by building that GEO product. So in many cases, we've bought businesses. In many cases, we've built different platforms. In this case, we see GEO as strategic, not just to helping our clients get to the next generation of marketing, which we're doing, but also the ability to learn how those models are thinking, how they're ingesting information, and how do we get information back from them.
Thank you.
Thank you, Callie.
And this now concludes our question and answer session. I would like to turn the floor back over to David Steinberg for closing comments.
I will close simply by saying I have never been prouder of running this company. We have the right people at the right time with the right technology, not just to win today, but to win for many, many years to come. We're incredibly excited about the innovations around artificial intelligence and how they are going to fit into our platform and how we are going to be the disruptor of marketing over the next generation, not the disruptee. I hope everybody has an incredible day and an incredible week. Thank you for listening.
Ladies
The
and
long
gentlemen,
call.
thank you for your participation.
Dude, this company sucks.
Yeah.
Right?
Dude, I'm going to sell all of my stock and go all in and puts tomorrow. This is absurd.
Dude, why is the stock even up this much? Like Workday crushed it today and they're down.
So only 40% revenue growth. This is just such a disaster.
Workday is going to disrupt Zeta. Like,
dude,
heard it here first.
Nick, I'm gonna need you to summarize that entire call for me.
No, he took his hard notes.
Dude, it's
so
hard
focused.
notes, he said.
Dude, he took hard notes.
I mean, there's a couple quotes that I liked. I feel like
yeah.
the first one was just addressing the agent stuff. They said we charge per action, not per seat, whether it's humans or agents, regardless of how the AI feature looks. We're in a good position for durable growth.
Yep.
And I like that they kind of stated that they're on the consumption base and kind of gets rid of any sort of seat-based narrative or license-based narrative they have.
Yeah, literally the things that they said were straight up to combat all the FUD, all the fear, uncertainty, and doubt out there right now around SaaS. And he basically, my favorite part was when he answered about the LLMs and how they can't run ads and they can't do what Zeta does. Like that was like, put him in the grave.
Yeah.
Put him in the grave, throw some dirt on him. Like he buried him. He buried that whole thing. And then did you notice the stock popped big? Like after
yeah,
he
it
went,
started popping.
Yeah.
It started popping when he talked about
the LLMs and the competition and
the competition.
And dude, like,
yeah, go ahead.
Yeah. If Claude was going to disrupt them, then why did OpenAI partner with them? Why wouldn't OpenAI just disrupt them? And the fact that he said in the call too that their data never ever touches the LLMs, so they can't like work with them and then steal their data and then put them out of that's massive in itself as well. That's like when he said we literally have it behind a wall. Like they can't touch it. It's our data. And it, you know, like that's their moat. He kept reiterating that. What a call. What an earnings, what a call. I mean, I'm baffled, guys. Like I said in the private, I did not expect them to hit $18 today. I mean, I know they're not there right now, but like to be up this much, 13%, and then to keep going up after hours.
Yeah, tomorrow will be nice. I think.
I mean, the craziest thing he said was the 18 cube guys. I mean, that was the craziest insight I've ever heard.
The what?
The 18 cube thing he said. 18 quarters of growth, 18 years of a company, 18 acquisitions. It's the 18 cube theory or something. It's like, all right, Dave.
Oh, yeah.
Thanks.
He had a dad joke too that was horrendous, man. I won't lie.
Dude, zero debt, negative debt.
Yeah, the bank owes them money, dude.
Dude, they're shorting so much that they owe them money. They're getting squeezed right now.
That's so funny.
Yeah, one quote that I liked, he said, so once again, this whole narrative that large language models are going to destroy enterprise software, in our opinion, is silly. We think that large language models are going to be a component of what we do every day. And they continue to say, we think about large language models as we do with cloud infrastructure, think AWS or Snowflake, where they're at some point going to be a part of our stack. In fact, we work with them all, mostly all of them, if not already, which is new information too, right? Because as we know right now, they have a partnership with OpenAI, but we kind of suspected that they're going to work with all the other LLMs eventually. So he kind of just confirmed that right there.
Yeah. I also thought his commentary on TTD, because like all these companies
that was awesome.
You're a dye company.
Yeah.
He was like,
he totally shat on them during that. And he says, I suppose they're going to comment on that soon. And it's like, they got earnings tomorrow morning. And I think he knows that they're going to comment on that too. So it's good they came in here and they came in after AppLovin and after Reddit, which arguably is like a different standpoint. But it is interesting how you were saying, like they are taking market share, which is clearly the case over here because they're expanding margins, they're expanding profitability and revenue. And that's how you're taking market share when you're growing faster than the TAM itself. I think
my
favorite
slide. Where is it at? The one showing the customers just continuing to spend more.
Now they serve 120 out of the 500 Fortune 500 companies.
Yeah.
24%.
Yes, it's good.
120, their NRR is 120 as well. That was really nice to see.
Yeah.
Yeah, I think this is one of the best slides in their whole slide deck, showing that less than 1 year customer account, how much they're spending, and then like the longer they're with them, the more that they're spending.
Yeah, that's always a good thing.
That just kind of that shuts up all the haters of like, oh man, like they're gonna get disrupted, blah 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 blah. Yeah.
Who's a hater? I don't think I've ever came across anyone who's a hater of Zeta.
There's a few
out there.
Oh, yeah, they're out there, dude. They message me all the
time. As soon as the stock goes down, man.
Dude,
they message you all the time. Like I don't. No one's ever messaged me about like.
Yeah, I got a comment.
You're not Mr. Zeta. You're not Mr. Zeta.
Yeah, dude.
I am not Mr. Zeta. That's true. I'm not Mr. Zeta.
Dude, I talk about it every day. I had one guy say to me, he's like, "You need to shut up, or I'm going to mute you." So I said, "Mute me."
Mute me.
You need to shut up.
Shoot. You better shut up, or I'm going to mute you.
That's why.
It's
Hey,
like,
Arya, welcome, man. I'm glad you showed up.
Yeah, man. I was just busy writing the midterm.
Yeah, Arya, do you see how like nice this is? Like the 6 pods now. It's like
that's
perfect.
the only reason you guys wanted me, right?
Yeah, there was 5 before, and there was some empty space, and it wasn't.
Yeah, I got you.
Dude,
what a quarter, right?
Yeah, fantastic quarter. So, guys, I know we were talking about TTD there a little bit. So, a quote, that specific quote on the RFP presence, David said this. What I would tell you, so keep in mind, this is on RFP. What I would tell you is that we continue to see Salesforce and Adobe, just talking generally about the RFP process. To a lesser extent, we see Oracle and a few other smaller players in the CRM RFP. Then in acquisition RFPs, we're seeing companies like the Trade Desk who continue to be challenged as we take market share from them. Like, that's huge, man. That's the exact quote right there. That's calling them out. It's like calling out a dog and shooting it. It's insane, dude. Oh, that's awesome. That's awesome.
Yeah,
but
it,
at least,
it was pretty good.
We continue to understand that Salesforce and Adobe are trying to compete in this space. They're the biggest players, right? But I think it's specifically when it comes to acquisition, right? So for those who are watching, the difference between retention and acquisition is very important. Retention means a customer comes to you with a database and says, hey, here are all my customers. I want to market to them, right? That's what Adobe and Salesforce are doing. They have no ability to go out there and say, here's a bunch of new customers that you don't know of. The only extent they can do that is buying third-party data. They can't do it with a high degree of accuracy. So when they talk about acquisition, and David says, hey, in the acquisition space, we're seeing players like the Trade Desk who are going to be challenged because we're taking market share from them. What that means is Trade Desk has the ability through their open source data and their infrastructure to help companies find new customers outside their current customer base. So the fact that Zeta is just chewing up market share from Trade Desk is awesome to see, because it's a very competitive space and it's allowing their clients to grow.
For sure. I mean, one of the things that they said that I like too was that we expect to remain active buyers for stock, especially at these levels.
Love that quote.
Management stunk.
Pretty clear they started buying again.
And he said, he doubled down on that. He said, I think the best use of our cash right now at these levels is to be buyers of our stock. That's huge. That's huge.
I mean, he's not wrong. The company's
not wrong. It's so cheap. It's a
3x sales, bro.
No, they traded 2x 2026 revenue. 2x 2026 revenue.
Yeah.
That's crazy.
And they sandbagged all of it. They sandbagged all their guidance again.
The valuation gets a little bit ridiculous, especially in that raise. It does, like, this is one of those things where, like, it just makes no sense to me. Like, it doesn't make sense why they'd be trading so cheap when they have SPC decreasing. They're reaccelerating revenue. They're already in a hot sector where obviously software is not the best sector, but they cater to LLMs. They're taking market share. Their free cash flow margins, their operating margins are expanding. It's like, what else is
and now
there?
They're profitable. Like,
yeah, like what? Like, why are they trading so cheap? Like, I don't know. I just don't get it. But at the same time, like, you know, I'm not going to go full court this because I'm 40 years old, or 38 years old. But
damn.
I don't know, man. If I was Arya, I would be all in this. Like, I would just not care anymore. I would just be all in this. I'd sell Adobe first of all. I would
Whoa,
sell
dude.
Adobe. Yeah, well, I don't like he did. This is your competitor. So I mean, you're gonna. I don't know.
Those are strong words there, my friend.
I would definitely sell
You
Adobe.
hurt his feelings, dude.
Yeah.
Mean.
No,
he's Mr. Adobe, man. You got to be careful with what you're saying here.
Hey, I prefer to be Mr.
You
Uber.
get a lot of hate messages
with Adobe all the time. It's ridiculous.
It's crazy.
Like, definitely
Uber is
weekly.
good buy. Uber's a good buy, though. I'm not gonna lie. Uber
Thanks.
doesn't make sense that it's being sold off like it's gonna be disrupted. But yeah, again, like the sentiment with a lot of these stocks is just getting a bit too far. After a call like that, I'd expect the bounce to continue, but you know, who knows what's actually going to happen. All I know is that you know, the company's better than it was yesterday on paper, right? So they did increase their guide and everything. I don't know.
Yeah, it was great.
Somebody said analysts should be hiking up their rates tomorrow, or their targets and stuff. But it's like, it's funny because like the lowest is already like $20 some. The mid is like 20, 27. Yeah.
Yeah, that's crazy.
Yeah, analysts are so bullish about this. Well, whoever is the few analysts that are reporting on it. Yeah, I'll pull it up. Hold on. Good.
Yeah, I mean, there's only 9, right? Like, it's not that many. And the lowest?
One of them were spot on though. They had 2028 revenue at like 2.27 billion, and they were guiding 2028 for 2.1, and now they just raised it to 2.3. The person on Seeking Alpha, look at this, had it spot on, dude.
So
look at this.
That's wild.
2.27, but this one analyst, it was 2.1, and now they just raised it to 2.3 by 2028. Yeah, if you look at
yeah,
let me see. There's not a lot, but there's enough where it's kind of funny.
We better see some upgrades tomorrow. We better.
I know.
So-
There's
But this is what I'm saying.
13.
Like it's
Yeah.
their case is 25. Consensus of analysts is 29, and then bull case is 36.
It's crazy.
There's 13 analysts for 2026 full year revenue, and the max is 1732. So they guided for 1749 to 1762. Like it's just they beat the top estimate for revenue. That's what I'm seeing on Fiscal AI. I don't know what it says on Seeking Alpha, but
yeah, 28 cents of non-gap, and then they did. I think was it 6 cents of gap?
I don't know. I don't know about that one.
I don't know what the gap was. I don't think it'd be 6 cents.
I don't know, but 21% beat on non-gap either way. 4% beat on.
Yeah, it was only 6.5 million, so I don't think it'd be 6 cents of gap.
Do you guys put any emphasis on the Rule of 40? I know that a lot of SaaS investors like it, and Zeta said they're above 50 again.
Yeah, so free cash flow margins. Let's see here. I guess we can go by EBITDA. So EBITDA
What does it
margin,
tell you?
adjusted EBITDA. So 24 is EBITDA margin, adjusted EBITDA margin on a trailing perspective. And then growth was, oh shoot, did I put the wrong growth for this quarter over here? What was growth for this quarter?
24 5%.
Okay, so I did have the right one. So next quarter growth is going to be 35%, 38%, right?
Yep.
So if we go by, hold on. So if we go by the adjusted EBITDA for next quarter.
That was a slide where they said they're above 50.
Yeah, I mean, it kind of makes sense just from like, I'm going to compare this company to this company and this company. Like you're basically getting your adjusted EBITDA and you're adding the revenue. So they usually do the forward basis, but they usually go for a free cash flow margin. But yeah, that would be above 40 for free cash flow. If you do adjusted EBITDA, that's going to be above 50. But I mean, yeah, it's just like,
it's
kind of like a highlight number. Like it is, yeah, it doesn't really mean too much.
I mean,
like,
unless you're not loving, and you're at, Rule of 40 is 150. Then it's like, okay, now it's insane. It's just.
I mean, me personally, I think
it's cool to see, but it doesn't mean much to me.
I think free cash flow is the best way to value this company right now because they're just pulling in so much free cash flow. And if you do this kind of free cash flow model, and like even if you just pull out to that 2.3 billion in revenue that they're looking for at 16%, this is what I was showing on the charts earlier. Is like if you go 3 years out to 2028 and you run like 21% revenue growth rate at 16%, you get this number to like 373, around 371 is what they're guiding for in free cash flow, right? By year 3 of terminal of 23, which is pretty cheap, honestly, for free cash flow terminal at 21%. You're looking at a $29, not financial advice, intrinsic value of the company. And like I use DCF to really be early on like Palantir and Robinhood, right before they were really flipped to that profitability. You can't do free cash flow on everybody, obviously, but Zeta is like a really good company to do it on because they have very little debt and they're really bringing in that free cash flow. And then you just look at the margins. You look at the margins and obviously you want to see their net margins catching up, and they are, right? Like here's your free cash flow margins going from 7.8 to 14, and then negative net margins and operating margins climbing all the way up to now for this quarter maybe on a trailing 12 month, basically break even. So, I mean, there's nothing like so at this point, right? Nick, we talk about all the time. You made that one post about kind of like their wall of worry, like some things that would like boost them this year beyond like FIFA, beyond the midterms. We talked about what? We talked about profitability. Got it. We talked about continued stock-based compensation getting under control or becoming lesser of their revenue. Check. And now really there's only one one.
Oh
God.
Sorry, that was my text. That was my phone.
That is the funniest. I haven't heard that message since it's like Civilization 4 or something, man. What the hell?
Oh,
My bad.
That's got to be a droid.
Yeah.
That's an iPhone.
That's an iPhone.
Yep.
The only thing now is the lawsuit, man.
Yep, you're
That's-
right. You're right. And there's this like made up
Only
thread of
thing.
LLMs, right? So that too. But
Yeah.
the lawsuit is the only other unique catalyst for Zeta Global. But just think about that. If it's positive news, this thing could rip on that as well, which would be great to see. Negative news, we just have to deal with more of what we've dealt with the last month and a half.
The Claude stuff.
Yeah, the Claude stuff. On that topic too, right? Another quote from David. He said, "LLMs have no capabilities around marketing. We're not seeing any agencies at this point." He's talking about holdcos. Agencies at this point look to move activation to an LLM because they have no activation capabilities. That's as per David Steinberg, which is true, right? So LLMs have no ability to actually deploy and activate they can't actually send them out there. The only companies who can are companies like Zeta Global, Adobe, Salesforce, TTD, et cetera, et cetera, et cetera. They still have to utilize these verticals right now. Now, maybe one day they'll be able to do vibe code yourself something that'll be able to deploy ads. We'll have to wait and see, especially with the agentic technology that Google comes up with. I think they'll be able to do something eventually. However,
because they have data.
Yeah, well, and they also have this massive ecosystem, and Google OAuth 2.0 allows you to authenticate a user and an agent tied to a user across like that entire ecosystem. So I think they're going to be in a good place. Same with Meta, but those are all walled gardens.
But
right? So
they don't need to be. Zeta doesn't need to be Google. They don't need to be Meta. They're a sub $4 billion market cap we're talking about here. We're not talking about a mega cap. You know what I mean?
Yeah,
or Mag 7. It's crazy. I honestly think like the company's just not known about. I think we are so early. I really just think like you look how many analysts are covering this company. I think it's really just it's very underknown. People like I don't know. It's just
it gets known and then it gets forgotten about.
Well, only on X and only in our echo
That's
chamber.
true.
Like, which is crazy because like Chris Greiner was just on CNBC. David Steinberg has gone on CNBC multiple times. Literally, him and what's his name are bros.
Dan Ives.
Dan Ives, they're bros. He's a what do you
He's
call
a director
it?
or some sort of advisor.
Not a director,
Consultant.
like a consultant.
Yeah.
Davis knows. Davis was there, man. This guy has an insane network. He just
I don't deserve it, but I'll take it. It's because I'm quiet.
Couches.
That's why I just
sleeping on people's couches.
Yeah.
In Korea, Zeta became quite.
I gotta do what I
famous
gotta do to get in.
Did you do
All
it?
right.
Yeah. So, what is the comment section stating? Anybody in the comment section?
Oh, it's been a lot.
Okay, let's go through it. Let's start answering some questions.
See you later. I'm leaving. I'm selling.
Let's see. Micro to macro, which has been shouting out our stream, which we really appreciate. Not sure which one of you turned me on this, but thanks. It was a no-brainer
Probably
the
me.
second I saw it. Love it. Yeah, probably me.
Definitely wasn't me.
Let's see. I'm really expecting the re-rating from analysts tomorrow.
Yeah.
I agree, but again, it's crazy because like they're already all like 20 plus. So I mean, no, like high 20s. Yeah.
Yeah, this is a macro thing, guys. I've said it so many times. This is just macro. There's no other way to explain it.
But what I hate is that again, they're so underknown that we could just sell off tomorrow, guys, and then people will be back to shitting on me in my comments.
You know, it's funny because like I see SaaS stocks that sell this cheap, you know, like ones that are dying, like ones that are decreasing revenue growth, ones that are decreasing profitability, not even getting close to profitability.
Sam,
Ones
could
that
I,
are very disruptive sector. Yeah.
Sam, could I get your thoughts? Which companies do you think are dying?
That I think are dying or that Wall Street thinks are dying?
Let's do both. But which ones do you think in the SaaS sell off like is actually quite valid?
Atlassian is, and so is Workday. And this is
Workday.
also, Workday. This is also from a financial perspective because they're not really growing that much. They're already a mature company. Like, I don't think they're dying, but they already have a large amount of share as far as enterprise growth. So it's like, what other growth are they going to get from that possibly? But also, this is very disruptive, right? So you have human resource capital management, right? HCM. And you also have, they're getting into financials, but they're competing against ADP, right? So the issue here is that you're doing it on a per seat basis. So you're already starting to lose your revenue or your net retention because of the fact that companies are downsizing, but also you have that holistic platform approach. So as time goes on, they'll want to rationalize their applications. And there are companies that are actually looking to get off of Workday. Now, there's nothing wrong with Workday, companies have been using it for a long time, and no one really uses on-prem software anymore whenever it comes to human resources capital management, right? So that has been its moat for a long time. But now we're reaching a point where it's like, well, all these companies already have Workday. Like, what kind of things are they going to do? Like, how are they basically innovating? And I think that it lost its premium significantly because of this issue. Now, I don't think the company's going to die like tomorrow, but I do think that it's going to find itself in a very precarious position because of its, I don't want to say that it's cannibalizing itself, but AI is basically cannibalizing the entire sector for human capital resource management, especially with accounting too. And this is probably part of the reason why you're seeing Paycom down a lot, because not only do they have Betty, which is their internal LLM or that they use for their own software, but Paycom makes money because they're able to get like these payments or plans or whatever companies have issues with their payrolls, right? But also these companies that cater to small businesses, like, you usually want to look for companies with enterprises or enterprise exposure because of the fact that those tend to be larger contracts. They tend to be locked in for like 4 or 5 years, and they always just naturally grow over time because they increase the prices, and these companies can't really go anywhere else. It's already enterprise. What do you think of a company like Atlassian? That's highly disruptible because now you're talking about project management, and they're not even a leader in the other sectors when it comes to like ticket queue management or support, whatever it is. That's already ServiceNow, right? So to get to what I think Wall Street is killing, that companies don't really deserve it, that we see lately, is cybersecurity. Like, this just makes no sense to me. You're never going to have oh wait, I think you're muted.
No, I wasn't saying anything.
No, Nate. You're still muted.
Nate, I think you're still muted. Okay. Anyways, cybersecurity.
I just dropped the F-bomb right now. No, but cybersecurity is ridiculous because it's like, dude, you have this compliance approved application that's actively protecting your entire ecosystem, that's constantly being updated with new virus definitions or new hacks, whatever it is, in real time. Like, what kind of LLM is going to replace this? Like, this is just dumb data selling up. Now, certain cybersecurity stocks have already had a crazy valuation for a long time, CrowdStrike and Cloudflare. So the market's questioning, do they still deserve their high premium compared to their competitors, right? I think that's a question. Sentinel-1, though, is the one that comes to question because they're profitability metrics. So when I do think of software companies that the market has wrong, it's definitely ServiceNow. I think they are very wrong in that. In fact, they're already profiting off of AI. Zeta, obviously, they have wrong. MongoDB is already catering to a lot of startups, so companies are still continuing to use that. And plus, they're the leader when it comes to non-relational databases or NoSQL. Snowflake has always been expensive, so they're just bringing it back to earth, right? So I think a lot of these companies, like, their valuations compress and come back to earth, but you're also going to have companies where it's like, how do you sell this product to as many people as you have for a while when companies are looking to downsize their costs and possibly build something in-house? And the only one that's probably not going to challenge that is cybersecurity, because you can't sit here and tell me that these enterprise companies are going to build their own cybersecurity endpoint or whatever, network firewalls, whatever it is. They're not going to do that. But they're going to go in, they're going to build their own human capital products. I wouldn't be surprised if Meta does it. In fact, Meta has a lot of, I don't think they use ServiceNow, actually. Don't quote me on that, but I know that they build a lot of their in-house products from a lot of people here at Meta. They're told to build their own products to support their own environments. So that wouldn't surprise me if a lot of these companies might get disrupted by that, especially the small business ones where that can't necessarily afford these expensive products. So, I mean, that really depends. Go-to-market really matters too. Like, if your sales team can't sell your product, you're screwed. right? So that's why a lot of SBC goes toward go-to-marketing. But the good part with Zeta is that they're able to gain market share from leaders like TTD, and their SBC is not that high, right? So I think that's the part where it comes wrong. Anyways, guys, I gotta bounce.
Dang.
It was great having you. By the way,
your rebuttal.
Huh? No, I don't want to hear it. I don't want to hear it. There is no rebuttal because I'm going to leave right now. No, I didn't mean to say sell Adobe. I'm just messing. Ari already knows me. I just mess around with the dude all the time. I mean,
actually, we just met about an hour ago, but anyways.
Yeah, I know. I just met Ari. No, but I mean, like, you pick a lot of good stocks too. I mean, ASML is like
has done phenomenally well.
Has done really well, right?
Yeah.
Adobe's a mean reversion play, in my opinion. I feel like they would really have to change something, right? But it is cheap.
I think
it is cheap for what you're getting.
In about, I don't know, say a year, call it 6 quarters down the line, we'll probably see that's kind of a bit of a bold prediction I have, is we'll probably see an acceleration in terms of revenue growth. I think their pivot not pivot per se, but the add-on of consumption-based charging is really going to start to show. They're kind of working through and like selling those different products, both on the AEM side and on the core, Creative Cloud side of things. So anyways, it's kind of just like a wait and see situation, but I'm perfectly happy. Like, I'm not stressed one bit about it in terms of I'm down on my stock. But
I mean, you have time on your hand, so that's
that does.
There's 14 analysts covering this the last 90 days, and 9 are strong buys, 2 are buys, 3 are holds. It's crazy. The lowest is 25.
Okay, guys.
Yeah.
All right, Sam.
See you later. Gotta get my kids. Talk to you guys later.
Going as well.
Yeah.
3
we're
plates
probably
tonight.
about to wrap. We're probably about to
3
wrap it
plates.
up. Anybody want to say anything before we wrap it up?
I think we're good to get going. I'm sure Nick would have had something to say, but he's conveniently not here.
He's walking in snow again.
Yeah.
He's muted this time.
He's conveniently not here. All right, bye.
Yeah.
See ya.
See you guys.
See you, Aria. All right, guys. Sweet.
Oh, shit.
Appreciate it.
Whoops. Whatever.
Yeah, I mean, to wrap it up, holy crap. I mean, they crushed it, dude. I mean,
it was to be expected.
Yeah, we can make a bunch of posts. Yeah, it is really nice when it's expected and they actually come through and then they still blow everything out of the water. I mean, yeah, I mean, I've had other companies where I'm like, yeah, like they're gonna kill it, and then they miss, and it's bad.
Absolutely.
But cool. I appreciate everybody tuning in. Like and follow, subscribe to me and everybody else on the channel, and we'll catch you guys in the next one. Take it easy. Go Zeta.
Later.